Very good morning. You're watching India Market Open. It's going to be an interesting day of trade. Yesterday, of course, the bulls failed to sustain above levels of 25,000. And we talked about this. We've had two good days, Monday, Tuesday, Wednesday. Monday, Tuesday were good. Wednesday, of course, we gave in, unfortunately. But globally, the setup looks decent. Japan is up over 3%. So I guess we've got at least a positive handover to begin with.
Yeah, and such a massive... Did Bajaj Finance lead the global markets higher? I mean, just look at the appetite for such a paper.
Bajaj Housing Finance.
Bajaj Housing Finance.
What? I mean, you know, when Sanjeev Bajaj said on the Anchor Book Day that he's overwhelmed. I don't know what word he'll use now, because this is...
I don't think he anticipated this for sure.
No. The over 63 times... oversubscribed for this, 300,000 crores locked in. My question is that what are the volumes going to look like today with that much money waiting for an allotment?
Yeah, but I think a couple of things that stood out for me, right? The other two IPOs that saw significant subscription was Tata Tech at 1.5 lakh crores. Yeah. You had Premier Energies, if anybody would have guessed that, at about 1.4 lakh crores. And the grey market premium indicates to an 85-90% listing day gain. If that's what happens...
For Bajaj
Housing Finance. If that's what happens, the market cap of Bajaj Housing Finance goes up to 1 lakh crore. Now you compare that to an LIC, which is at 40,000 crores. So just doing, it's not, I don't even know whether this is an apples to apples comparison. Of course, the CAGR on LIC AUM is close to 6%. When I looked at the IPO details on Bajaj Housing Finance, their AUM growth is at 31%. Margins, 3.9. LIC margins, 2.9. I mean, I can't understand another better comparison for Bajaj Housing Finance. LIC Housing Finance.
LIC Housing Finance.
Oh, yes. Oh, sorry. Yeah.
I was wondering where the lower market cap came in.
So if you look at both of these, and you know the fact that Bajaj Group has created significant wealth. So it's just keeping those numbers in mind.
Also, 89 lakh investors applying for the IPO. I think it shows the frenzy in the primary markets and also the
lack of good quality paper. You think?
The other two also, by the way, had decent subscriptions. The other one which are open on decent subscriptions. 89 lakh investors applying for this IPO. Quite stunning, really.
So I would say that the difference with the others, and maybe one reason why, is pedigree, right? Everything about this IPO is pedigree. They're looking at the Bajaj Finance journey, and you're looking at the same management, at least the same core management coming in. A lot of people who are working in Bajaj Housing Finance have learned everything they have from Bajaj Finance. So
and if you also think about their moat, like Niraj usually calls it, moat. Is that they have the safest book. So they cater to the employed professionals. Their average ticket size is 46 lakhs, which is higher than the rest of the industry. They have the ability to cross-sell significantly. So it's safe, it's good quality, it's growing significantly, its margins are great. I think the only downside at which I spotted was their loan-to-book value. So that could be a little bit of a concern, but apart from that, I mean, this is a story that everyone should subscribe to for enough. But
you're not going to get it. I mean, the question actually
listing day
is on listing day. Wait, what do you do? So I think that's going to be interesting
at 90% at listing.
I think it'll be really interesting on the listing day to do a comparison of the price to book at which this one will trade versus what some of the others.
This is already expensive, right?
Yeah, so but how expensive versus what kind of growth? So it'll be very interesting that day. September 16th.
September 16th it is. But meanwhile, for today, and let's just take you through the global handover, it's been fairly good. So I would say after a very volatile day of trade, finally you had US key indices closing higher. And the reason for the volatility is the details of the inflation data, CPI data for the month of August, which was out. So you had NASDAQ recovering, and that's thanks to your mega caps, your NVIDIAs, your AMDs, all of them, completely jumping up in trade. And that's what's pulled the S&P 500 and the NASDAQ up. The Dow also just about 100 points up. But the core of it is the inflation data which came in. So it's a mixed bag there. because CPI has, that's the consumer price inflation, has risen to 0.2% in August, in line with expectations. The yearly figure, the annual figure, which is 12-month inflation, is at 2.5%, actually lower than the 12-month which you had last month, which is 2.4%, and the lowest since Feb 2021. So far the story is good. But when you look at the core inflation data, and this is what has hurt market sentiments to some extent, because core inflation is when you strip away food and energy and all of your volatile sort of contributors to inflation, that has increased at 0.3% versus expectations of 0.2%. So that's a bit of a downer. That's also increased the number of people who are expecting a 25 basis point cut from the Fed versus a 50 basis point cut. The bond yields, meanwhile, have sort of very slightly moved back at 3.65%. Crude is the other interesting story, a sharp rebound after yesterday and almost a 2% move overnight, because in the sense at lower levels there was some buying coming in. There is a hurricane on the horizon which could impact supplies, etc. So then you had your Brent back above $70 mark. As far as Asia is concerned, the open has been pretty good. And you have the Nikkei up about 3%. Remember, India CPI data will be out today as well. You're expecting another 5-month low on it. So that will be positive data coming in to watch from an Asian market perspective. And let's pull up the implied open and look at how we are set up. We're set up for a very good start, 123 points up on the implied open. So it's going to be a good sort of midweek kind of a trading day after a bit of a slump towards closing. You had selling pressure coming in towards closing. And let's pull up the fund flow to give you a sense of who sold. I mean, not really much, because you had buyers on both ends. Maybe retail investors have come in and sold a bit. Because at the end of trade yesterday, you had a bit of a sharp slide coming in, Samina.
Indeed. So it's been an interesting sort of day of trade that's played out globally. And fortunately for us this morning, the handover, like Tamanna said, isn't looking too bad. So we've got something to hold on to as we gear up for trade this morning. Yesterday was tough, and we talked about this, right? We've had a good day on Monday and Tuesday. We had defied global cues. We had closed above significant levels. But yesterday was more of a do or die sort of a day for the bulls. The first half, like you can see on the chart, was actually steady. We opened flat, picked up some gains through midday trading. And then it was largely the last 2 hours of trade when the markets began to see selling pressure emerging. The Nifty could not hold on to the 25,000 mark yesterday. In fact, briefly in the last hour of trade, it even dipped below 24,900. Of course, fortunately for us, or for the bulls rather, it managed to do a little bit of a recovery in trade. Well, let's take you through what happened. Broader markets could not keep up with the outperformance yesterday, so they sold off as well. We thought oil and gas would do well in trade. It's an obvious, right? With crude prices declining so significantly, OMCs would stand to gain, but that's not how trade played out. Upstream, downstream sold off quite sharply, turning out to be the biggest loser in trade yesterday. I did think banks had some early indications of ending the weekly Bank Nifty expiry in positive note. That didn't happen either. Bank Nifty, after spending most of its day trading higher, sold off towards the close of trade yesterday. Metals, auto, PSU banks and the CPSE basket have been seeing selling, and they continued to decline in trade yesterday. Talking about autos, it was two trades. You had Bajaj Auto on one hand that gained significantly, and then you had Tata Motors that declined sharply on back of a downgrade, and BMW's reviewing its guidance downward as well. Apart from that, buying continued in defensive, so pharma and consumption did okay. Pharma has been gaining substantially since the start of August, really, and it's not been letting up in that sense. Apart from that, what's worth mentioning is the fact that Suzlon gained on, again, a brokerage upgrade, and you also had Century Textile from the broader market that caught our attention. Volumes were healthy. They've acquired a significant land parcel in Worli, which of course garners well. The stock went home with gains of about 5%. Apart from that, I don't think there's much to write home about. A late hour selling spoiled the sentiment for the bulls, but this morning implied Nifty indicating to 120 point gap up. So back about 25,000. I think 25,150 becomes significant again for the bulls.
Most certainly. And just before I get to that, the good part, Tamanna, flows look positive at both ends.
Yes, flows were looking good at both ends. So I suppose you have retail investors. And actually the index also looking weak because of Tata Motors. I mean, the kind of walloping that Tata Motors got because of that UBS note. And interestingly, I mean, our colleague Puneet did a bit of deep dive on the analyst who put out the note. And the gentleman has had a sell call on Tata Motors for a while.
Yeah.
But I suppose the winds sort of aligned for a sell call on Tata Motors because of combination of price cuts.
And BMW's guidance, I think that was what spoiled the sentiment
overvaluation, whatever it may be.
And the belief that Windsor launch, the MG Windsor launch will eat into the market share of Tata Punch EV and Nexon as well because of the pricing is
very quickly, and I don't know whether we checked these numbers. So Tata Motors started the day off lower, but the markets were still trying to hold up. I mean, the Nifty, I think at 10:30, 11 was well about 25,100.
Yeah.
It was, I don't know what happened last hour of trade, but the sell-off just intensified. Maybe Europe.
Across the board. See, the small cap index, I don't know if you pulled that up. The small cap index
the broader markets have
was
sold
hurt
off
the most, and you had that sort of push down across the board when it came to
So Niraj, still a sell on. I mean, I know I've been on the camp of thinking that we look expensive, but you've been an eternal bull in that sense. So is this a sell on rally or buy the dip? Did people buy the dip yesterday?
No, but the positive, I think, so what's happening is the positive trade might still be likely, index-wide, but I
think it's time horizon on portfolios, also, right? You've got to be mindful of.
But the near term, you don't need anybody to tell you that the positive trade is likely today. Just that smart money is skimming money and spending profits of lucrative trade. So people are saying investments, we are still holding on to 80% of our positions, but on trading positions, we are certainly skimming, even if we believe that there is more upside there. So that is part one of the conversation. Part two, remember viewers, when the Nifty Bank was up 1% 3 days ago, 51,500 proved to be that point of resistance, and it still remains that key hurdle. And unless banks really perform, you probably don't have the Nifty doesn't have the legs to really move up substantially, because Nifty IT2 is no longer as cheap as it was pre-June, right? So you need banks to perform. Somehow they are hitting this wall of resistance despite the fact that banks are cheap. Now, does passive money post the rate cuts get into banks, and therefore do banks lead that move higher? Remains to be seen. But for now, 51,500 near term remains the port of call. And Samina rightly highlighted Suzlon. But I must say, with the valuations that these stocks are now trading at, they are discounting what, 2030, 2031, what have you. I think at some point of time, these stocks will probably see a time or a price correction or a combination of both, because these valuations for Suzlon, for Inox Wind, for Inox Wind Energy, really, really stiff. So let's wait and watch what happens.
We put this article out yesterday as well on NDTV, where the cost of hedging Bank Nifty is at a low from January this year as compared to the Nifty 50. What it also means is that most traders believe that they don't need protection or hedging for a downside trade on Bank Nifty. The other thing that stood out is the bearish trades on Bank Nifty stand at a 3-week low. I don't know whether that indicates that maybe the sentiment is changing. When will it change is anybody's guess, but most traders do believe that the downside, at least for now, on Bank Nifty could be capped as they seek lesser hedging opportunities to hedge themselves against volatility on Bank Nifty versus the Nifty 50 index. So I think this may be some sort of a positive. We'll of course have to look at how the futures and the OI plays out as we will take you through the F&O picture in just a few minutes. But quickly, let's get down to stocks, and I have two good stocks and one that may move negatively. I'll start with NBCC. This one could be an interesting mover. Remember, it reacts quite positively when it comes to order wins or deal signing on NBCC. Yesterday was not a great day, but it wasn't a great day for most broader market names. NBCC has signed an MOU with MTNL, and they're looking to collaborate a very large land parcel in New Delhi. The project is valued at a significant number of 1,600 crores. We don't know the revenue split or the cash flow between the two entities, but for now, will definitely be viewed as a massive positive on NBCC on development of this massive land bank in New Delhi. Apart from that, Route Mobile, may not be great news. The promoter entity is looking to offload 6% stake through an OFS. The floor price has been fixed at 1,635. The stock went home flat yesterday. A small discount to yesterday's close. Of course, the discount is not as large as what we've seen for some of the other OFS in the recent few months. This opens today and goes on till tomorrow. We will get announcement of a block deal sometime soon once the markets open up. So Route Mobile, keep that on your radar. The other one, I'm going to start with Ola Green Tech. And of course, then Tamanna and Niraj can add to that list. But the PM's e-bus, which aims to have 38,000 e-buses in 169 cities, is a huge positive for this player. I know extensively we've debated about how expensive this counter looks, and I think Niraj may also be able to add some value on this one. But nevertheless, it's going to be another good day. 3.5% was eked out yesterday, with the 4,400 crores have been set aside for procurement of 14,000 buses. So I know Tamanna, Ease My Trip has got into this business, but they still, Ola Green Tech still is a way.
No, Ease My Trip is thinking about getting into the business. They will
still market leader still remains Ola Green Tech, Electra Green Tech.
Electra Green Tech, but also Ashok Leyland, Eicher Motors, JBM Motor, all of them benefit from the e-bus side of things, and we'll get Puneet up in a bit for more details on this. But I just wanted to add one more thing. It's going to be another bad day for Tata Motors from this perspective, unless you see a bounce back after the pummeling yesterday, because this version of EV subsidy, the PM e-Seva scheme, does not give you any benefit for passenger vehicles. So your Tata Motors, your Maruti, all your companies that are betting on electric four-wheelers are not going to be getting
Not Maruti. Maruti is completely non-EV for now.
They will come, no?
At some point of time,
They've said that 2025 they have to go
current
EV.
portfolio, no EV.
Current portfolio, no EV. But I'm saying that you want to launch 6 EVs. Maruti is saying they want to launch 6 EV vehicles.
Yeah, so M&M.
The government is not coming and subsidizing those who want to buy passenger vehicles in the electric vehicle space. And this is something that Nitin Gadkari said time and again in the last week from at least 3 different podiums. Their point is that I want to push EV as a government on two-wheelers, cheaper, mass, so good for Bajaj Auto and the likes. And I want to make it a mass transit system, so your buses. So those who want to, be nice to the environment and buy a four-wheeler, which is an electric vehicle, do it on your own dime. There is no subsidy for that. Yeah. So that might have an impact.
But just on Electra Green Tech, very quickly, I mean, trailing 12 months, 160p, assuming that they double the profit.
It's the trend of green cars or green buses.
Agree. Yeah, it's fabulous. Their numbers look very solid. Their guidance is very solid. But even if they double and then double, they are trading at 50 times FY27p. It is not cheap.
But Niraj, let's also be honest, right? The market gives you a premium for future outlook and growth.
Yeah. But if how much of it is discounted?
The surface of it right now. And where is the opportunity? I mean, if you're a trader who's not studying the space in depth, the first trade you would make this morning would be Electra Green Tech because of what the government has said.
Yeah, but our job to caution on valuations, I'm just doing that.
Yeah, caution on valuations, absolutely. And the other just outcome, since we're talking about some of the cabinet decisions yesterday, is on the Ayushman Bharat scheme. And I think we should just add that very quickly as well before I get to the specific stocks. Because now, and this is a great thing from the perspective of a government decision for the average Indian, really an important one. So 5 lakh rupee health insurance cover now is extended to all citizens 70 years and above from the government, and that's important in a country like ours. What it does do is impact positively stocks like GIC and New India Assurance, because those are the ones, GIC and New India Assurance, because those are the ones that will actually go out and implement and be the vehicles to implement some of those schemes. So that is one to keep on your radar as far as cabinet decisions are concerned. But the other one is steel stocks, because again, a policy move which was impacting the markets today in one sector, because the government has extended their anti-subsidy duty on imports of welded stainless steel pipes and tubes coming in from China and Vietnam. You've had a big jump in imports from both these countries in the last year or so. This was already a duty in place in 2019. It's extended for another 5 years. And this comes after industry saying that Chinese goods are imported into India at lower prices. So who benefits? A Tata Steel, a JSW, Welspun, Ratnamani Metals and Tubes are some of the companies that could benefit. And, a calculation of how much more expensive Indian companies are in terms of the product, it's $32 per million ton versus Chinese imports. So That could be one upswing at a time when otherwise the whole space is not looking too good in terms of steel. I mean, overhang of Chinese demand, cheap Chinese dumping, all of that still continues. And if you're merely extending a subsidy in the light of which anyway Indian steel was more expensive, I'm not sure how much impact that's going to make. Sentimentally, though, you might have at least a good start for some of these companies. Castrol India was just the other one. They have expanded their auto care product range. Not a big part perhaps of their revenue, but could be good sentimentally. They've introduced microfiber cloth, China sponge to their existing range of products. Brigade was the other one that I was looking at this morning. They have entered Hyderabad with their flexible work. It's a company called Buzzworks, which is part of the Brigade group. And it's a 25,000 square foot space that they have in High-Tech City in Hyderabad. They're, of course, aiming for 1 million square foot space in their flexible workspace. So Brigade could see another interesting day today at a time when real estate has really kind of lost its sheen. So those were 2 or 3 of the stocks that I have on my radar.
My list, I started with the caveat, Shyam Metallics, because the press release is dated 9th, but it's come to everybody's notice and to our notice because it came into our mailboxes post market hours yesterday. It's not there on the exchanges at least. So start with that caveat, and also with the notice that the stock hasn't rallied per se, even if the release came out post 9, and it's a very promising release because they are saying that the company foresees 3x revenue growth to 40,000 crores by FY29. So in 5 years, FY24 to FY29, 3x revenue. That's a very, very solid CAGR performance that the company is saying it will do, northwards of 25%, which is pretty strong really for this one. They'll expand into stainless steel, aluminum in the next 5 years. And then the release, of course, speaks about various kinds of reasons why this is positive in the sense of things that could happen within the company. But watch out for this one. So if Shyam Metallics reacts today, you should know why. They forecast a very strong growth number in the times to come, for the times to come. So that's first. Stuffcraft in Batliwala and Karani conference has said that the FY25 revenue growth will be 12 to 15% led by strong festive demand in Q2 and Q3, and the gross margins will stabilize around 38% in FY25 with EBITDA margins at about 11%. A strong near-term target, so watch out for that one in the session today. And a slew of other things, but I'm choosing GT&D India as the third one. A euro 55 million order from Dubai-based Grid Solutions for supply of high voltage products. They've effectively, viewers, gotten 2 orders, right? $155 million in total. Both orders are for supply of high voltage products. One is from Dubai for 55, and one is €100 million award from Grid Solutions SAS France. Both orders for a period of 5 years. So do watch out for GT&D. Could have a bit of a strong reaction today. So top 3 on my list.
Okay, the big story this morning really is auto once again because of the slew of decisions, and you have a new version of FAME. It's called PM E-Drive scheme now, and it's a sort of encouragement to electric vehicles. Now, the cabinet has launched, the cabinet announced, cleared the PM E-Drive scheme, allocating 10,900 crore rupees over 2 years to boost EV usage. This will support electric 2-wheelers, 3-wheelers, e-buses, and establish numerous charging stations. Let's listen in to INB Minister Ashwini Vaishnav, who talked about it.
आज PM E-Drive स्कीम लॉन्च हुई है. इसमें 2-व्हीलर्स, 3-व्हीलर्स, ट्रक्स और एम्बुलेंसेस और ई बसेस को कवर किया जाएगा. इसमें एक बहुत इंपॉर्टेंट ध्यान रखा गया है कि एम्बुलेंस के केस में हाइब्रिड एम्बुलेंस को सपोर्ट करेंगे बिकॉज एब्सोल्युटली 100% श्योरिटी चाहिए होती है एम्बुलेंस के मैटर्स में. ट्रक के मामले में जो अगर हम देखें व्हीकल्स में जो पॉल्यूशन होता है उसमें मैक्सिमम कंट्रीब्यूशन ट्रकिंग से होता है. इसीलिए इस बार ट्रक्स को भी इसमें लिया गया है ई ड्राइव प्रोग्राम में. और ट्रकिंग में कई अच्छी टेक्नोलॉजीज डेवलप हुई हैं, उनको इस कार्यक्रम में इंक्लूड किया गया है. और साथ ही साथ बहुत बड़ा फोकस किया गया है कि चार्जिंग इंफ्रास्ट्रक्चर को देश भर में डेवलप किया जाए। इसके लिए 88,500 साइट्स को सपोर्ट करने के लिए 100% सपोर्ट होगा, वो फैसिलिटी इसमें दी गई है। और साथियों, इसमें ये ध्यान रखना है कि ये जो सपोर्ट है ई ड्राइव का, दिस सपोर्ट इज ओवर एंड अबव दी PLI component and the GST relief which is already available to the EV segment, EV sector. चार्जिंग इंफ्रास्ट्रक्चर को देश भर में डेवलप किया जाए। इसके लिए 88,500 साइट्स को सपोर्ट करने के लिए 100% सपोर्ट होगा, वो फैसिलिटी इसमें दी गई है। और साथियों, इसमें यह ध्यान रखना है कि ये जो सपोर्ट है ई ड्राइव का, this support is over and above the PLI component and the GST relief which is already available to the EV segment, EV sector. This entire program will be a big help in having sustainable growth and making sure that our country progresses very rapidly on the electrical vehicle movement.
Okay, so Tushar is joining us now, and he's been covering, of course, all the details on the new scheme, the PM E-Drive. Remember, it is the next iteration after FAME 1 and FAME 2, and this is something, Tushar, you in fact reported on the 2nd of September on NDTV Profit when you talked about a new version of this scheme coming up around mid-September, and that's exactly what's happened. Now tell us what's different, what is better and what is not as good in the third version of the FAME scheme, which is now called the PM E-Seva or the PM E-Drive scheme.
Yeah, hi. Yeah, so it's called the PM E-Drive, and the two things that actually stand out for this particular scheme is the focus on building charging infrastructure and the lack of any support for electric cars. But if you talk about electric cars, they already get a support about when they're taxed at about 5% GST, as compared to 43% or 48% for passenger vehicles in general. The big focus here is the charging infrastructure space. The minister pointed out that there was 88,500 points that they will cover. Remember, 2,000 crore rupees has been separately allocated for setting up 22,100 fast chargers for electric two-wheelers, three-wheelers, buses, as trucks, etc., as well as electric cars. The separate allocation has been for the ambulances, which was not present in FAME 2. In terms of outlay also, while the outlay is very similar, FAME 2 had an outlay of 11,500 crore rupees. PM E-Drive has 10,900 crore rupees, but the duration is much shorter this time. FAME 2 was for about 5 years, and this one is about for about 2 years. FAME 2 covered or provided subsidy to 13.21 lakh EVs. About 1 million of those were two-wheelers. This particular scheme, the PM E-Drive, wants to cover about 24.7 lakh to electric two-wheelers, 3.16 lakh electric three-wheelers, and 14,000 odd buses. Now, the 14,000 odd buses was also crucial because they get a separate allocation of 4,391 crore rupees, which will go to public transport agencies to procure these 14,000 odd buses. FAME 1, which was the first iteration, the first EV scheme that India received, was actually lackluster. It was launched in 2015, lasted till end of FY20, March 31st, 2019. The outlay was about 750 odd crores, but the outgo or the disbursal of the subsidy was about 550 crores. So not a big success. We also covered just about 2.78 lakh EVs at that point of time and only 465 buses. So a significant jump, we can say, towards sustainable mobility, because remember, charging infrastructure is the key bottleneck for adoption of electric vehicles in India. So if that's solved, everything grows.
So that's from
Tamanna.
the policy, right, Tushar, and that's from the policy perspective, of course, where you have a new iteration of this. Passenger vehicles not really included, but a big boost for two-wheelers as well as public utility, right? That's the focus. So Puneet joining in actually on what is the kind of impact we could see from a stock perspective this morning. Yes, Puneet.
Hi, good morning. So, yeah, Tushar did highlight the scheme about, what's the outlay and everything on that part. But there are certain aspects also within the scheme that are, slightly negative going forward as well. So, while there are two distinctions that is very important, 3,690 crores, which is the allocation for electric two-wheelers, three-wheelers and buses. That is on one aspect. The 4,300 crores which Tushar highlighted, that will be given to public, the PTUs or those guys who will actually procure those buses. So that is not involved on the demand side of the incentive. So if you go and purchase the car, you will get those part of the 3,600 incentive. But the 4,300 will go to these government bodies and the public STUs basically who procure these buses. That's one of the major difference. The other aspects is within some, they've introduced some provisions such as the e-voucher now. That is, will be essential for OEMs to claim reimbursement. But of course, that's one positive coming out of this, because there was some delay and some, leakage also in the last scheme that has been plugged now with this e-voucher scheme. Essentially, going forward, they will be allocating buses, but the first preference that they mentioned here is to those cities that will prefer to scrap the old buses. Now, don't know how much time it will take into this whole process, because earlier you could just procure the buses as part from CESL, but now that this new provision has been introduced, it might be slightly negative, because it might take a lot more time to scrap the old ones, get the new ones, and the whole process. The other thing I just wanted to address, that electric trucks also incentives have been given, but again, it will also involve scrapping of the old vehicles from North. So that's another thing, that scrapping has been introduced for electric trucks, as well as for allocating for buses as well. So that's, I think, slightly negative. According to me, it might take a lot of time, which has been one of the key issues. The other aspect might be negative for electric cars, because that provision has gone now. There's no incentives that you will get for purchasing an electric car now. So Tata Motors, Mahindra and Maruti might be impacted because of that. On the electric two-wheeler scheme, of course, we have positives such as Ola, Bajaj Auto, TVS Motors and Hero. Specifically, we'll see the top three guys being benefited, while on the other side also, on the e-buses, I think it's going to be a big question mark for likes of Ashok Leyland, Tata Motors, as well as VECV, JBM Auto, Electra. And the reason I say this is because the payment mechanism that we addressed last week, it has been, there is a government guarantee now, but essentially it's the same, that they will have to operationalize the buses for the next 12 years. It's not an outright purchase. So the companies have highlighted that this is slightly bigger of an issue, because they don't want to operate the buses for 12 years. They just want to sell the buses together and get done with it. But that has not changed. While the government has introduced a payment mechanism that in case in case the government bodies are not able to pay, the government of India will pay, but that's slightly negative again. So they still need to operationalize the e-buses. So we will see that participation from someone like a VECV specifically, because they have been absent from these tenders specifically. So some more clarification would have been better, but I think e-two-wheelers will be the most benefited. E-buses still, somewhat in dicey zone, and passenger cars have been negatively impacted.
Right. Absolutely. Thanks for that, Puneet. So, this is going to be the big focus this morning, and in fact, Niraj, there's a Morgan Stanley note out that talks about how Ashok Leyland and Tata Motors, because of the CV business, of course, become clear beneficiaries of this. The word is still out on OEMs.
Yeah. But I thought just one thing before we move on, but just that overall summation that they are doing, that the observation seems to be that production-linked incentive benefits are on the rise. Demand-side incentives seem to be waning in most pockets, if not all. And their belief is that because all listed OEMs have qualified for PLI incentives, whilst a lot of startups are not getting these incentives under PLI, maybe overall, in general, except for exceptions, listed OEMs might have an incentive, but some of the EV-focused, passenger vehicle-focused companies may not.
So M&M, for example.
Maybe, yeah.
And no, policy-wise, it's interesting. You're incentivizing the companies to make cheaper electric vehicles. You're not incentivizing customers to go out and buy electric vehicles. So that's a sharp difference. But meanwhile, just before we get to the F&O segment, I thought this was interesting. And this was an exclusive comment made to us in a conversation. Honda Motorcycle is all set to ride the EV wave. The company's CEO, in a conversation with NDTV Profit, says they're launching an EV Activa by March 2025. Now, that could really be a game changer. Listen in.
Electric, we don't call electric Activa. But anyway, Honda now under development is electric vehicle. So we will launch annual year means by March of 2025.
In the Indian market?
Yes, yes, yes.
Okay.
So, electric vehicle is one of the way for carbon neutral. So, not only electric vehicle, flex fuel also very important.
Yeah.
Well, let's now do a detour and hit the F&O segment. It's been a very volatile day of trade yesterday. We saw that the markets were unable to sustain at higher levels. We couldn't even close our levels of 25,000 in trade yesterday. Recent support levels of 24,802 remain an important or sacrosanct level for now. But let's take you through what we're setting ourselves up for this morning. Implied Nifty is indicating to a very solid start. So an opening about or closer to 25,000 is what we should be expecting. That's what the picture looks like. Fresh long build-ups was seen on the street. And the reason I say this is because Nifty's September futures are trading in a 20-point premium. But we've also got a marginal increase in OI. So not very aggressive on the long side. But the sentiment this morning, at least on back of this data, is a lot more positive as compared to what we'd seen yesterday in trade. Well, on Bank Nifty, it's been a struggle on Bank Nifty, to be honest, for the last couple of weeks now, or I'd even say months. What was a standout was the cost of hedging on Bank Nifty has dropped significantly, and bearish trades on Bank Nifty stand at a 3-week low. Even when you look at the Bank Nifty future F&O snapshot, it actually looks promising again this morning. So there will be a very good chance that after the weekly expiry yesterday, fresh longs have been seen on Bank Nifty. Futures are trading in a premium, and there's an increase of over 5% in the OI. The expectation is that Bank Nifty will once again attempt to move higher in today's day of trade. Well, let's look at where the call and put spread is this morning. Nothing really changes. 25,000 continues to see maximum call OI, which largely means that in the near term, 25,000 is an important level that the bulls will want to sort of come out and take out. On the downside, you've got 24,000, 24,500 is looking pretty healthy, and 24,800 and 700, which largely means that if there is resistance or if there's support that the bulls will seek, it will be around the levels of 24,700 and 24,800, which we even saw in trade yesterday. Well, what is also worth noting is that 25,500 continues to be a very active level where calls have been written. So you've got a picture that hasn't changed significantly on the put and call side. The trend largely remains one of consolidation. Some traders believe this is a sell on rally sort of market, and which is obvious from the kind of levels you're seeing. Also, what you want to note is 25,000 is where most option strikes are at, which means that for an option trader, 25,000 is that level where there'll be the minimum, or rather the least losses on expiry days. So that's what we have in terms of puts and calls. It was interesting across stock-specific action as well. A lot of the activity came in from the larger market, broader marketplace. But as you can see, Aarti Industries saw short built up. Tata Motors had it very rough yesterday. The trend was pretty much the same. Birla Soft also took it to the chin. Short built up obvious on that counter. Page Industries, interestingly, saw some longs being created. GNFC also saw short trades in trade. Polycab has had it rough, but there was short covering yesterday, so it means that we do open, Polycab does open up for long trades to be created at these levels. JK, Muthoot, Biocon, MGL also some long unwinding. Anticipation is that the upside from these levels could potentially be capped. Well, we've got Amar Dio Singh, who joins in with his F&O strategies. Amar, but before I go into stock-specific trade, how are you feeling about the Nifty? I know we've woken up to good cues from global markets. 25,000 should be reclaimed in the early minutes of trade. But the F&O data is still not looking very promising in terms of a directional trade on the index. Would you consider buying some calls on the Nifty, or would you avoid a trade on the index for now? And also, while we're at it, a strategy on Bank Nifty. There's an increase in OI. Nifty bank futures are trading at a good premium. I feel like that is giving you a lot more positive indication at this stage.
Yeah, I would say that if we look at the indices, currently we are definitely witnessing consolidation there. And Nifty is trying to sustain above the 25,000 levels, 25,200, 300. That's a very crucial zone of resistance, but it's unable to do that. Or on the downside, 24,700, 800, that's a very strong zone of support. So what we are seeing in Nifty is that Nifty has been trading in a very narrow and consolidated range. And also, if you look at the Nifty heavyweights, they are not showing any signs of momentum. We are seeing some correction there as well. Secondly, if you look at Nifty on the intermediate term trend, continues to remain strong and positive. On the long-term trend, continues to remain strong and positive. That's the reason any correction is being witnessed by a pullback. So till the time we don't see Nifty trading below the 24,700 levels, I would say any pullback is a buying opportunity. If it breaches that level, then we could witness some sharp correction.
Ahmed, let's talk stocks. I believe you've got a constructive call on Apollo Tyres. I mean, crude prices moving down is great news for tyre companies, but this morning crude is trading higher, so sentimentally there may be an impact on Apollo Tyres on the downside, but you're expecting a moderate rise in the price of Apollo Tyres and hence you have a bull call spread on this one?
Yeah, that's correct, because what we've seen in Apollo Tyres is that the stock has earlier had corrected significantly from almost 560 levels to 480, and currently it's broken out of a consolidation zone, and that also on significant volumes. And yes, the decline in crude prices it seems to have added to some momentum there. But at the same time, overall, looking at the auto space, this is a stock which can perform well. So one can look at Apollo Tyres for a bull call spread. So for the September series, buying up 510 call and selling a 520 call with a stop loss of the difference is currently around 1, so the stop loss can be the difference is currently around 5, so the stop loss is 1 and the target is 15. So one can look at a bull call spread in Apollo Tyres.
Right. What about Asian Paints? I've noticed that both strategies are crude ancillary. So I'm assuming that you do think buying calls on Asian Paints is a good strategy, expecting the stock to go up.
Yeah, actually, a couple of factors which are playing out in Asian Paints is that, yes, crude oil prices definitely they have helped. But apart from that, prior to that also, Apollo Asian Paints was in for consolidation. Because if we go back in time, from almost January, the stock was in for consolidation, was unable to breach the 3,100, 3,200 level. And recently, we've seen that the stock has taken out those levels quite decisively, and that also on significant volumes. Having said that, if you look at the intermediate term trend, continues to remain very strong and positive. The momentum is very strong. Daily charts are also positive, and monthly charts, some of the technical indicators have turned positive after a very long time. So the stock needs to sustain about the current levels. So one can look at a call option for the September series, 3,400 call option. It's currently around 34, so somewhere around 31 can buy with a stop loss of 7 and a target of 65 on the upside.
Amar, thanks for that. Those are two long trades coming in on Asian Paints and Apollo Tyres as well. Both those count as beneficiaries when crude prices decline. On the Nifty, no indicative trade. It's been in a little bit of a consolidation mode with some upside and some downside. This morning, of course, an opening about 25,000 is what we are working with. Now, whether that gets sold into is anybody's guess. But for now, Tamanna, Niraj, the sentiment is fairly positive.
Yeah, absolutely. You're looking at a good day because global cues have lined up well. Asia is looking robust as well, and you have, I think, the whole host of policy initiatives is also going to be moving the markets up because now you're coming to the business part of the term, right, as far as the government is concerned. So you're already seeing, I mean, look at it in a slightly larger picture, Niraj. You're already seeing a whole host of defense deals being inked. Ministry of Defense moving on inking those deals. At state government levels, you're already seeing a fair number of deals being linked. So that kind of capex push is going to be coming into the system. And then, of course, policy initiatives like what we saw with the cabinet decisions yesterday. So all of that lining up, and that's why you're seeing some positivity there on the index as well.
Yep. And speaking of positivity on the index, there is a clutch of stocks that should be on your watch list because they are definitely there on our watch list. So on our watch list, well, starting off with a few which might have a positive reaction. NBCC signs an MOU with MTNL, 1,600 crores land development could be positive. Nazara Tech, maybe not as much, but acquires 15.86% stake in Stan, so watch out for that. Tata Steel, a grant of £500 million. The deal cemented officially with UK. There were rumors yesterday. Official release post-market hours. Watch out for this one. GE&T India, actually a $155 million win. So watch out for this one. Could be a big mover today. Castrol India has grown auto care product range and expanded into other categories. So watch out for this one.
Okay, a few more which are in focus. Brigade Enterprises, Buzzworks, which is their flexible workspace arm, has now entered the Hyderabad market with a 25,000 square foot property. Engineers India will be finishing the Mongolia refinery. BPCL and HPCL both in focus. For BPCL, IOC gets a production concession, and in HPCL's case, there's a nod to the Vizag-Raipur pipeline project.
Well, the three that will see pressure this morning is Route Mobile. The promoter entity is looking to offload 6% stake through an OFS. It's coming in at a small discount to yesterday's close. MedPlus Health unfortunately gets 2 drug suspensions, and HPCL revises cost of VRMP. Well, those are the top stocks you should be tracking in today's day of trade. But as always, a quick check on implied Nifty. It looks like it's going to be a good start. IT is going to be one sector you want to very closely track, with that 8% gain on Nvidia, and of course global cues being positive. Today could be a morning when IT stocks could take the lead. Well, we have with us Nirav Asher, Head Equity Research of Latin Manhalal, joining in. Nirav, good morning. Thanks for joining in. It's been oscillating between gains and losses. We've been in a fairly tight range, no local triggers or cues to track. It's all about the Fed rate cut. How do you play the market fundamentally right now?
Yeah, good morning and thank you for having me on your show. First of all, we start off with the domestic markets. They have been waiting for global cues, totally dependent on global cues as far as the US Fed rate is concerned. Apart from this, yesterday, I think we've seen the vulnerability of the Chinese data. For example, we've been hearing about this Chinese market real estate slowdown, the metal sector being affected. And yesterday, I think we've seen this fall in the crude oil prices also, and to a certain extent, the auto sector also. We have seen BMW, they have cut the guidance on the back of muted Chinese demand. So I think all these factors, if one were to culminate it together, I think the markets have been a bit nervous about the possibilities of a global slowdown, especially in the light of the fact that the crude oil prices have gone below $75 and even below $70 a barrel. So I think the traders were quite jittery in the markets yesterday. In the second half, we have seen definitely a good amount of pressure on the frontline stocks like Reliance, State Bank of India, Mahindra & Mahindra, L&T, and Tata Motors. Fortunately for the markets, I think the golden troika of the FMCG sector, the IT and pharma has been the saving grace for the domestic markets. So I think the focus of the market is towards these sectors. And of course, today we have some good news on the global market front also, as well as on the domestic market, some policy initiatives which could be a booster for the auto-related stocks.
Okay, so of course that's some of the focus that Nirav Asher is talking about, but another set of stocks in focus, and let's get a little more detail on this, is definitely steel companies. Tata Steel, for more reasons than one. And some of the subsidies they're getting from the UK government helps them. But from the Indian side of things, the extension of an anti-subsidy duty on imports of stainless steel pipes from China and Vietnam for an additional 5 years will definitely be a boost. Mehika is joining us to tell us why. Yes, Mehika?
Yes, good morning, Tamanna. So just for viewers, anti-subsidy duty is basically a tariff that is imposed on imported goods that are believed to be subsidized by the exporting countries' governments. Now, the government has extended this anti-subsidy duty on the imports of welded stainless steel pipes and tubes from China and Vietnam specifically for the next additional 5 years. And this duty was initially introduced in September 2019. Now, the extension comes after the Indian industry claimed that Chinese goods are imported into India at very low prices. You can also see the trend of higher imports from China and Vietnam. In Jan to July 2024, China's imports from China were up 10% year on year, while Vietnam were up 17% year on year. And when you talk about the difference, what the difference is between domestic steel versus landed Chinese imports, well, landed cost of Chinese steel imports in August of 2024 stood at $579 per million ton. Thus, domestic steel prices of products are at a premium of rupees 2,692 $32 per million ton when you compare to the China landed import prices. And these rising imports have been a key headwind for the Indian steel industry. Now, India, despite being the second largest producer of steel, turned into a net importer of steel in FY24 for the first time since FY16. The steel trade deficit stood at 1.1 million tons in FY24, and the same trend is seen for FY25 so far, according to Ministry of Steel data. Lastly, potential beneficiaries of the extension of the anti-subsidy include Tata Steel, JSW Steel, Welspun Corp, Ratnamani Metals and Tubes, because it kind of gives them a level playing field and reduces the competitive landscape from cheaper imports.
Right, thank you for that, Mika. That's the anti-subsidy duty extension. Keep metal players on the radar. Shrikant Chauhan now joins in with the technical view on the market. Shrikant, good morning. Thanks for joining in. To begin with, what is the trade on the index? No real direction emerging just yet, but the fact remains that the upside seems to be capped at 25,100 for now.
Yeah, good morning, everyone. I think, yes, the markets are like consolidating before the major event, which is on the 18th of this month. I think the market has clearly defined its trading range between the levels of 25,350 and 24,750 on the downside. I was of the view that today we may see the markets opening below the levels of 24,750 or 800, because yesterday there was deep sell-off in the market. But on the back of specific recovery in the US markets, we are again going to see the market somewhere close to 25,000 levels, which is the equilibrium level of the entire range. So till the markets are not crossing 25,350, we are going to see range-bound sort of activity. And after opening higher, we need to see that whether the market sustains above the levels of 25,000 or not. So we need to be more and more stock specific in this market. Yes, in case if there is any correction during the day, then with a stop loss at 24,750, we should look for taking some long bets. But if there is any higher opening, let's say somewhere close to 25,150 or 200 sort of levels, then there we should look for reducing long positions. The real strength I'm expecting to come only after crossing the levels of 25,350.
That's on the Nifty, Shrikant. What about the Bank Nifty? Very rough day of trade yesterday also, and it was expiry as well. Do you see a turn in sentiment there on charts?
Yeah, I think surprisingly, Bank Nifty is doing little better than the Nifty broader market. It is holding well above the mark of 50,900 or 51,000, which was the very crucial sort of resistance for the Bank Nifty for last almost 15-20 days. And after dipping down to the levels of 50,500, again it came back and it is sustaining even though there are like uncertainties in the market. So I am of the view that again the Bank Nifty may re-challenge the levels of 51,500, but crossing these levels will only trigger short covering. Otherwise, there also I am expecting 51,500 and 50,900 as the range in which it will consolidate, and it will fall further if it breaks and closes below the levels of 50,900. So 51,500 is the level which is corresponding to the level of 25,350 on the Nifty.
What about your top picks this morning, Shrikant?
Yeah, I would like to go with IT companies, and most of these stocks are well placed. And yes, there is definitely upside we can see based on their technical patterns. HCL Technologies is our preferred pick. It's a buy at current levels with a stop loss around 1740. We can see the levels of maybe 1900. In the long run, I am expecting stock to move towards 2050 based on its technical formation. We also like a few pharma companies. In that, Biocon is our preferred pick because it is holding very well, and most of the time whenever there is a correction we see specific buying interest and stock manages to surpass its previous high, which is something positive. So Biocon is also a buy at current levels with a stop loss close to 380, and this time we can expect stock to move towards 410 or 450. So Biocon as well as HCL Tech should be on the watch list.
Nirav, I'm going to do this stock by stock. So let's talk about two counters that caught everybody's attention yesterday. One was Tata Motors on back of the UBS downgrade and BMW reviewing its guidance as well. On the other hand, you had Bajaj Auto that saw heavy buying on large volumes, and it sort of became either or in trade yesterday. Tata Motors, Bajaj Auto, what do you prefer, and what do you prefer at current market prices?
Well, I think the name Bajaj has become magic. So everywhere we are seeing the magic of Bajaj Auto or Bajaj Housing Finance. Coming back to Bajaj Auto, I think we have a very strong balance sheet. We have very strong reserves. The market has been improving. The domestic markets have been doing quite well. At the same time, we are seeing a recovery in the exports also, because Nigeria, which is a very key market for Bajaj Auto, has also started reporting improved performance. So I think it's a win-win situation as far as Bajaj Auto is concerned. The benefits of premiumization as well as the benefits of electrification are accruing to them. I think definitely at this point of time, taking into account the fact that things have been going quite well, Bajaj Auto remains a preferred pick. At the same time, I think for Tata Motors, there are a lot of variables. I think JLR, there are some reports that JLR discounts have been picking up, etc. So there could be some pressure in the near term on account of the Chinese factor also. So I think we'd like to stay away from Tata Motors at the moment.
That's an avoid coming in on Tata Motors for now, but Bajaj, like Nirav said, is a name to reckon with. The group has significantly created investor wealth, and of course these are two different groups, but the fact remains that it's hot on the radar even now. Implied Nifty is indicating to a good start this morning, so we're getting a little excited as we gear up for trade. We'll take a break, we'll come back and track pre-open for you.
welcome back. We're looking like we might be set for a pretty good day. We're about a minute out from the pre-open session, and is the auto space going to be in focus once again is the question. Niraj Shah and Shrikant Chauhan with us this morning. Nirav, I'm going to come to you on the whole e-mobility piece and the huge policy push. Now, the question is whether it's really going to do much for listed players, at least in the passenger vehicle space, and on the other side, is it really that big an upside on the e-buses part of the picture?
Yeah, so I think these incentives which are being given to the manufacturers are essentially a part of the entire process to take the whole electrification journey forward. So I think it's just a step in the right direction as far as the passenger vehicle makers are concerned. So I think definitely it will be a temporary boost, but will go, of course, it will go a long way in encouraging the production of the electric vehicles.
Well, quick few questions on a few stocks, Shrikant, that were the big movers yesterday. What is the trading call on Tata Motors after yesterday's big fall? Bajaj Auto after its big gain? Suzlon after a rally on big volumes? And Century Textiles. So you've got 4 names that I need a quick view on for traders.
Yeah. See, like for Tata Motors, it is like it was doing well, but yesterday's development and all this guidance and all turned the sentiment little negative for the stock. It closed below the important level, and now the next level to watch out for would be 950, where it had support of 200-day simple moving average. So breaking this level will be certainly negative for the stock, and in that case we can even see the levels of maybe 900 or 875. So it is at very crucial levels, and based on its technical formation, I am of the view that we could see further more weakness in the near term. See, the broader pattern of the stock and the entire industry is still much better. But yes, in the short term, if there is any correction, then we can see specific correction in Tata Motors. So that's the view. We need to be careful. If there is any rally, then try to reduce some long positions and trading long positions. For Bajaj Auto, it is forming higher top, higher bottom, which is completely contrary sort of scenario for the Bajaj Auto two-wheeler stock. It is forming new highs on a day-to-day basis, and yesterday's rally clearly indicates that it is not going to stop so easily in the near term. But at the same time, it is not advisable for traders to take any position at current levels because the risk-reward ratio is not favorable. For Suzlon, we are not tracking it very closely, so there is hardly anything to say. But for Century Textile, we are of the view that yes, it is going to do well because the entire this realty space is showing a lot of momentum, and specifically this particular stock is going up with huge volumes, which has not we saw in the past. So based on its technical formation, the next level to watch out for would be somewhere close to 2850 or 2900. In case if there is any correction, then close to 2500 levels, the stock is having excellent support. So definitely it's a buy, but buy on dips somewhere close to its important support levels. Target can be between 2850, 3000 levels.
Shrikant, what about Tata Motors? It's so, as far as fundamentally the news is concerned, it's a bit of a mixed scene, right? Because it's good for the commercial vehicles division. Not so much for the passenger vehicles because no incentives there for customers, and Tata Motors really was in a bad shape yesterday. Would you see an opportunity here for Tata Motors at 976?
No, I think it is like showing weakness. Yesterday's specific technical pattern is indicating us that the stock is heading for minimum 940, 950, where it has support of 200-day simple moving average. And based on its entire pattern, I think it is heading for the levels of 875. So certainly at this level, it is better to avoid. Let it fall to its important supports to create any long positions. And in the past also, we saw spectacular rally in the stock. So it is like the stock can underperform or can consolidate for a time for next few days or few weeks. So it is better to stay away from taking any long position, even if there is any quick correction in the market.
Okay. You know, the other pocket to focus on is this jewelry firm. There's this note given out by Nuvama about possibilities of jewelry firms doing very well over the medium term. Their note was on Titan, of course. Today, and that was a technical note. Today, we have a fundamental note from HSBC on Kalyan Jewellers. And Mahima joins in to talk about the key aspects of this note. Mahima, what does HSBC have to say?
So Niraj, they've retained a buy and they've raised the target price for Kalyan Jewellers to 810 from previously 600, and this was a 26% upside from its yesterday's closing. Now what HSBC is saying that Kalyan stock has risen 8 times in the past 2 years, and they still think that they're in midway to its value creation journey. And what they're saying is that capital light expansion continues at pace, and exponential growth will likely prevent any multiple derating going forward. They're seeing several long range catalysts, and Titan journey is a useful guide for Kalyan Jewellers. And they're also saying that Kalyan has emerged as an entrenched national brand just like Titan. What they're also saying is that aspirational yet value positioning makes Kalyan less prone to disruptive competition, and they see opportunity to scale up the Candere business, which is a studded jewelry business, which will which is evaluating from Carrot Lane of Titan. Now two rain sources are there in terms of their margin tailwinds. The first one is having achieved large scale. There is clear incentive for Kalyan to capture larger value by opening own stores. And secondly, with a successful track record in terms of trade such as gold loan interest may start to come down as well. And lastly, what they're saying is that valuations look appealing if pitted against the high growth of other consumer opportunities. So this is the overall view of what HSBC has to say about Kalyan Jewellers.
Okay, not that big a mover, of course, despite the fact that the target price is very high. But keep in mind, Kalyan Jewellers has had a really good run thus far. Nirav Asher, jewelry companies, start of the festive season, a lot of wedding dates, as Chalet Hotels was telling us yesterday too. Is there merit in owning any of them? Titan, Kalyan, Senco, what have you?
Yeah, so I think the big boost for the jewelry firms came when the import duty was slashed, and I think this has preponed wedding purchases, and it has boosted discretionary buying in a very positive way. Most of these stocks have had a good run up. I think Titan had a good run up. After that, we've seen Kalyan Jewellers on the back of the fact that they have been very aggressive with respect to their store expansion, with respect to their strategy. So I think Kalyan Jewellers has also had a fair run. We've seen a good run in Senco Gold also, and the side counters like Thangamayal and TBZ and the Rajkumar Jewellers, etc. I think most of these stocks have had a good run. So I think it's better to stay away from these stocks at the moment.
Okay, so that's as far as the jewelry firms go. Now, 6 minutes into pre-open session, a clutch of stocks are moving around. Maybe some of those prices might settle. Tamanna pointed out Suzlon. I just want to bring that up again, because if Suzlon does 5% yet again today, this is the third consecutive circuit. By the way, on the day when the release came of the largest wind tender, the stock was as flat as a pancake. In fact, ended lower and then has gone up 3 circuits in a row. Massive up move here. Shrikant.
But Niraj, just very quickly, in the last 1 month, the stock is only up 1%.
Yeah.
In the last 6 months, it's up 110.
Valuations are screamingly stretched.
That's to our list of.
But they've gotten an
Electra, Trent, and now Suzlon.
Shrikant, just wondering, what do the charts suggest for a Suzlon?
Yeah, it is like Niraj, it is not under our active coverage, but okay. Yes, based on its technical formation, I think it is like something which is really like doing well on long-term charts. So we need patience to hold this stock.
That's the word coming in on Suzlon, or rather not a word that we believe Shrikant doesn't track this one too closely. Well, Ola Electric is up about 1.5% in early minutes of trade. You've got lots of counters that will see some, an Electra, Green Tech not doing a runaway rally just yet in early minutes. A quick check on Premier Energies, and this one's been drawing my attention only because it's a 9 straight days of gains after a fantastic listing. Saw some profit taking yesterday, but back up about 1%. Nirav, have you tracked Premier Energies? Did you subscribe to it? Did you ask your clients to? Either ways, the way it looks right now, the way it looks today, is Premier Energies a good buy?
Yeah, so most of the clients who had subscribed and who were fortunate enough to get the allotment have already sold out. So probably they would be repenting at this point of time, but not really actively tracking it after the listing.
Yeah, well, but the stock has had a runaway move for sure. Okay, so doing rather well for itself. Nirav, quick thoughts. With the oil price cut that has happened, a lot of sectors or themes may benefit. Paint companies maybe, tire companies maybe, OMCs maybe. Is there something that you are recommending on the back of that?
Yeah, so we liked certain paint companies, and we've been recommending Kansai Nerolac. So we have a recommendation at close to 300 levels, and we feel that the performance of this company has been quite good. They have an exposure to the automotive segment as well. They have a presence in decoratives. Their quarterly one performance was quite decent. And it's got a strong balance sheet also, and valuations are supporting. So I think we like that space. And generally, we tend to also identify certain players who are on the sidelines, who could emerge as a bigger player. So we are looking at Sirca Paints also, which has given us a good up move.
Okay, so that's the story as far as paints is concerned. I mean, a bit of that sort of upswing continuing, but not massively, I would say. On the losing side, look at Prism Johnson after completely socket-hitting runs last couple of days, coming off at least in the pre-open session. Honasa under a bit of pressure, but that's because of the block deal. Is this something you're looking at on the charts, Srikanth, Honasa?
Yeah, see, like for Honasa also, the technical pattern is indicating us that it is gradually moving upward. And the best part is that it has crossed its previous all-time highest levels, which was around some 510 in the month of January 2024. Since then, it is holding comfortably above the mark of 500, which is positive. And few days back, there was like block deal where like on that day also the stock managed to close higher. So based on its technical pattern, yes, I am of the view that the stock is heading for at least 600, 620 in next few days or few weeks. It will take some time, but yes, it is heading upward gradually. So it's a buy at current levels, more on dips. For other stocks, I think there also Prism Johnson, for example, there also we saw a spectacular run up. It was consolidating for a very longer time. And after crossing this particular level of 190, the stock managed to move towards 250. But I think somewhere close to this 250, the stock is having a major resistance. There, I think the stock is going to spend some time. But based on its technical pattern, I think in the long run, I'm going to say next maybe 6 to 12 months, the stock can do really well. So if there is any correction because of any reason, certainly we should look for taking some trading bets on the stock.
Few stocks that would be active in today's trade on back of brokerages as well. So we'll start with Morgan Stanley on PNB Housing Finance. We'll get some more details on that. But the stock itself has been upgraded significantly in terms of target price, 1.5% higher. You've also got HSBC and Kalyan. We highlighted that report for you. They've hiked their target price from 600 to 800. A good start, a 1% higher gap up. Wipro is one stock that I would like to see what it gets up to this morning. It was quite the loser in trade yesterday, about 1% odd on Wipro this morning. They've also clarified details about the deal they had with JFK, the timeline of the deal and what they would be doing for the airport in New York. So just very quickly, Srikanth, you want to come in on Wipro for me? Do you feel like the charts are sending out a buy signal?
Yeah, I think like all these technology stocks are doing really well and they are forming specific formation on long-term charts. For Wipro also, there is a possibility that the stock can form cup with handle sort of formation, which indicates that the stock is going to do well in the long run. At current levels, it is very close to its support area of 510, 505. But at the same time, at higher levels, there is a good amount of resistance at 530, 540. So crossing 540 will only help the stock to move towards 600 levels. Still then, I'm expecting stock to consolidate. But we like HCL Tech, on which we have even trading call.
Very quickly, focus on Dixon, Keynes, some of these counters buzzing pre-open because of a Nomura note which says that India is at an inflection point in electronic production led by PLI schemes, etc. So specifically on Dixon, they've initiated coverage with a buy and a target price of 15,567. Wow. On Dixon, that's an upside of 26%. They say it's the key beneficiary of localization in mobiles and IT hardware. On Keynes Tech, again, initiated coverage with a buy, target price of 5,969, upside of nearly 30%. So Keynes Tech also buzzing pre-open. Samvardhana maintained a buy, target price of 204. Shrikant, very quickly, any of these you like? Dixon, Keynes and Samvardhana?
Yeah, we like Keynes. There we have a bullish view. The stock is also very close to its support area after correcting from the highs of 5,200. So it's a buy at current levels, more on dips up to, let's say, 4,500. I'm not expecting stock to sustain below the levels of 4,500, but there is a good amount of possibilities that the stock can again move back to the levels of 5,000, 5,200 sort of level. So Keynes is a buy. For Dixon, the stock is forming a very complex sort of pattern at higher levels, so it is a little bit risky. We can keep stop loss at 12,000 for carrying any long position. So 12,000 should be the final stop loss for holding any long positions.
Right.
And
right.
Yeah.
Right. Shrikant, sorry, just 7 seconds left. So, but thanks for those calls. But also watch out for PNB Housing Finance. Massive price uptick by Morgan Stanley. So we'll keep an eye out for that as well. But here come the first trades. This Thursday morning, 0.5% up. So what we lost yesterday, trying to recoup some of that today. Banks not participating. I wonder if IT or some others are participating and should get the mid caps and the small caps up on the screen, because yesterday a bit of a pull setback to the mid cap or small cap space in the last couple of hours of trade. 1% half of mid caps thus far, good performance. Small caps to about 0.33%. But holding out the index, let's pull up the heat map and show you what's leading the charge higher. So Tata Steel, Hindalco, JSW Steel, so metals doing well. So metals is the first port of call. There is strength in ONGC today, oil showing a bit of a bounce. And IT, Wipro, HCL Tech Mahindra. So it's Nifty IT, which is giving that support to the markets in trade. What's not doing well? Well, the defensives just taking a bit of a backseat. Now, this may not necessarily last. I'm pretty certain that this advanced decline also will not last on the Nifty for sure. But M&M, Nestle, Ultratech, M&M I reckon sentimental impact because electric passenger vehicles have not gotten anything from the government, so which is why this stock is. But clearly, the standout beat, Tamanna, seems to be metals, because amongst everything else, yes, IT is doing well, yes, others are doing well, but metals and commodities standing out today.
Yeah, and nothing like a little dose of protectionism to help a sector. A nice healthy dose of protectionism. I mean, it helps the Indian metal industry and the steel industry, so why not? 2.5%. Tata Steel for more reasons than one, as we mentioned. Hindalco as well, doing fairly well. Now let's look at the broader indices, and it's a good Thursday. Let's not deny it. 1% up on the Nifty mid cap 150. Bank Nifty also not doing too badly relatively, and the small cap index also booming this morning. But let's look at specific stocks, and we're going to look at a bit of impact from the PM E-Drive. Remember, this is the new iteration of a scheme to boost electric mobility. So let's pull up Ola Electric, Bajaj Auto, some of those counters which are going to be in focus today. All of them up in the green. TVS Motors, because the two-wheelers will benefit more. Ashok Leyland and Electra Green Tech in terms of the buses, the e-buses part of it. JBM Auto actually also, if you can quickly pull up, we're going to be speaking with them in a few minutes. 4% up on Electra Green Tech. That's a stock we called out for you this morning, as we did with Ashok Leyland. Remember, the EV charging push also comes in. JBM Auto also about 3%. Thank you so much for that. The EV charging push also comes in. Tata Power, NTPC, Adani Power, Adani Energy Solutions, Reliance Power, Power Grid, some of those, because there's a whole host of impact that we need to see. Just one more on the cabinet decisions. I want to see GIC and New India Assurance, because remember, you're extending the Ayushman Bharat scheme to all Indians above the age of 70. Both those counters up in trade. Honasa was showing a negative move, at least pre-open, because of a block deal that continues, but that's a demand supply issue more than anything else. Kalyan Jewellers is the other one I just wanted to see very quickly. HSBC has a good note on it, and jewelry stocks in focus, and so is Kalyan Jewellers this morning, 2.5% up. So these are some of the counters that are working on what is turning out to be a pretty good morning, Samina.
Tamanna, even across the broader market universe, there is lots of stocks which have gains of over 5%. The top one on that list is Suzlon. 5% gain coming in on Suzlon this morning. Broader markets outperforming the benchmark. As you can tell, the mid-cap, small-cap and micro-cap index all doing better than the benchmark. So bouncing back after yesterday's fall. Varun Beverages, after the stock split yesterday announcement, the counter is looking good again this morning, 4% higher or Varun Beverages. Electra Green Tech, an obvious beneficiary of the Prime Minister's e-bus scheme, is gaining again this morning. It was up 4% yesterday, another 4.5% being added to the counter as we see it. Inox Wind, that counter is also looking good, 3% gains. JBM Auto, remember they've talked about how significantly they're growing their electric bus, which is the e-bus segment, and increasing contribution is coming in from that vertical. We will talk to the management in just a few minutes, but another key beneficiary to the e-bus scheme is JBM Auto. The stock is up 5%. This was impacted in trade yesterday because it does have a deal with BMW. So with BMW reviewing its guidance downward, JBM Auto was one stock that would have got impacted. But we will understand from the management on both those fronts. Well, apart from that, you've got Keynes Tech up 3%, Tata Steel on back of that upgrade coming in, or thumbs up coming in from Morgan Stanley on back of that 500 million grant from the UK government is helping the counter, trades the gain of 3%. NBFCs are looking very well placed. Metals that sold off quite sharply yesterday are gaining. Autos are looking good. Pharma continues to see some buying. IT is also rallying. On the sell side, you've got a handful of names. Honasa on back of the block deal is trading lower. Raymond once again trading weak, down 3%. Prism Johnson down 3.5%. You've got SGVN, IRFC, Uno Minda, Kalpatru projects are seeing some weakness in trade. So it's a good looking market. Markets are not, they're choosing to focus on the winners in trade this morning as opposed to the losers, to say the least. Shrikant, very quickly as markets open up, where are you spotting opportunities? Anything for an intraday quick trade?
Yeah, I think at this level, it is better to focus more on IT companies because there we are expecting a trend to continue for a little longer time. And in that particular space, we like HCL Technologies as well as we also like Infosys, which is currently around 19, 20, 25. It has formed higher bottom somewhere close to 18, 19, 1900 levels. And again, the stock can move to the levels of 1975 or 2000. So Infosys is a buy at current levels. We also like Apollo Hospital from the healthcare space. There we are seeing stock is consolidating at higher levels. And based on its technical pattern, the next level to watch out for will be 7,050 or 7,100. So around these levels, around 69.20, 30 levels, it's a buy. Around 69.60, 69.70 level, it's a buy with a stop loss close to 6,900 on the downside.
Okay, so it's all about auto this morning. It's all, JBM, like Samina mentioned, 8% up. In trade, Keynes Tech, Electra Green, these are some of the counters that are buzzing. NBCC is also a stock that we had picked because of land deals more than anything else in focus as well. Nirav, would you go in for a longer bet on the entire e-mobility story? And if yes, what are the players that you would look at? Would you stick to the two-wheelers, the charging players, or the buses?
Well, definitely it will depend on the case-to-case basis, but I think the preference would be towards the two-wheeler space because it becomes an entry level as such from an affordability perspective as well as the volume game. So I think I would prefer two-wheelers, but I think it's you have to wait for some time because just now there's just too much euphoria in terms of valuations. So one has to wait for the valuations to cool down a bit before taking a call on these stocks.
Okay, just so and we'll get in. I think the management of JBM Auto in moments from now, so we'll talk to that. Just mention a couple of other stocks. Mention about Shyam Metallics and how the release was of September 9th maybe, but the stock is up 3% or 2% now because they've spoken about trebling their revenues over 3 years. So watch out for this one. Could be an interesting one in as the day goes by. and mild upticks for maybe oil marketing companies as well, but nothing too dramatic really. Shrikant, they've been flattering to deceive the OMCs. Would you, if you had long positions here, would you kind of square them or would you stay long?
I think, see, at this levels, it is like better to stay put at these levels because most of these stocks have fallen to their extreme levels. Also, if we go through with the crude prices, then close to 69, 70 levels, it has excellent support, and crude has spent a lot of time around these 68, 69 levels in the past. So I'm of the view that from here again the stock can recover back and can again show some bounce back or some relief rally. So it's better to stay put, keep holding these stocks for a medium to long term view.
From a medium to long term view, this morning when crude is trading higher, BPCL is also trading higher. So this seems to be a weird sort of a trade that's playing out there. But Nirav, anything that you like? We've talked about quite a few stocks, quite a few brokerages. But if you've got to play the next couple of months, what sectors do you have a bias towards, and where are you spotting value in terms of stocks?
Yeah, so we just discussed Century Textiles, and I think when we went through the fine print of the announcement, they have got ownership rights for a 10-acre plot in Worli from Nasli Wadia, and this acquisition has been done for 1,100 crores. Now the advanced booking potential, the booking value potential of this plot is 14,000 crores, and it gives them access to contiguous land for 30-acre parcel. So the booking value potential of this is around 28,000 crores. So one can just imagine that this acquisition can be a game changer as far as Century Textiles is concerned. So I think this is one of the prime reasons why the stock has started moving up and is expected to keep moving upwards in the months to come. And we also like, apart from this, we like Godrej Properties in the realty space. So I think we could see some action in these counters.
Thank you very much, Shrikant, Nirav, for talking to us this morning. The stock of the day is JBM Auto. An 8% rally, volumes are significant, and this is all thanks to formalizing of the PM e-Pass scheme. We have with us JBM Auto joining in this morning. Nishant Arya, Vice Chairman and Managing Director at JBM, joins in. Nishant, hi, it's Samina joining in. What a morning to wake up to, right? Your stock is up 8%. The big focus for JBM Auto has been your electric bus segment. Before we go into what you stand to gain, you've time and again mentioned that this is a key growth driver for your company. Currently, as we see it, what percentage of your top line comes from e-buses?
35% of the top line for FY24 was e-buses.
And now as we look at the government, formalizing this, how do you plan to participate in this scheme that's been launched? Are there any active bids or tenders that you're focusing on to supply electric buses under this scheme?
No, so I think definitely. So today also we are at about 35 to 40% market share with our current order book and projects executed on ground across the country. So definitely we would be looking forward to harness this opportunity because about 40% plus of the whole scheme of 10,900 crores has been allocated for 14,028 buses, which is the most substantial part. And at the same time, it's quite heartening to see that new segments of electric trucks and e-ambulances have also been introduced here. Plus, a very big part, which would play a very critical role of a catalyst, is that 72,000 chargers which will be set up would reduce the range anxiety of the end customer quite substantially because we are selling to private customers and to different STUs. So I think it would play a very critical role in evolving the market.
Are there any already, because a lot of this was in the works for the last couple of months, if not longer, are there any outstanding bids or tenders with the government on this?
No, so not with respect to this scheme because the scheme was not in place So I think all the 9 cities were waiting for the scheme to be in place for them to come up with tenders. But definitely the PM e-bus Seva programs are something which we are all looking forward to. And as JBM, we were lucky to see that in the previous PM e-bus Seva program 1, we got 65% market share. So definitely we are quite focused and gung-ho on such kind of projects, as they'll be instrumental in defining the electric bus roadmap for the future, and we are totally geared up for that.
Mr. Arya, Tamanna here. Good morning. Just, trying to understand that the allocation is 10,900 crores for 2 years, and it includes two-wheelers, three-wheelers, buses, ambulances, which are hybrid, electric trucks, etc. So as a share of the pie, and sentimentally, of course, it's huge for the industry, but as a share of the pie, how much actually trickles down to a JBM Auto?
So definitely today we are at 35 to 40% market share, and the bus allocation is about 4,391 crores. So we would be targeting to at least maintain it, but ideally grow further than 40%.
Right.
Okay.
Nishant, just one quick question. You had set out, rather met your 5,000 crore revenue guidance for the last year. Now with this announcement getting formalized, would you go back to the drawing room and review your guidance?
So this year's guidance is about 6,500 crores.
Because what happens is risk to that with this scheme?
No, because actually the lead time for buses to come on road for any such project is at least 9 months to a year. So it would be benefiting us in the first half of the next financial year. But in this year, I think the transition time for the business execution is what would be required.
Nishant, stay on because we intend to now understand the whole situation with the two key players, because we are also joined in this conversation by Mr. Mahesh Babu, CEO of Switch Mobility. Mr. Babu, good having you. Thanks for joining in. We were talking to Nishant Arya, who is of course a very happy man. I'm sure you are a happy man too. Just tell us from your perspective, was this a much needed shot in the arm and better than anticipated, or is this in line with what you had estimated, the incentives that have been given?
I think firstly we have to thank the cabinet for approving the PM e-drive with a 10,900 crore outlay. It was expected this because the industry and Ministry of Heavy Industries, Niti Aayog, and all of us have been working to a program which had the continuity from FAME 2 and also look at how to allocate the funds suitable to the segment which is more needed. I'm happy that that e-bus have been covered. I'm happy that trucks have been covered with an incentive of 500 crore. The charging infrastructure have been covered. New segments like ambulance have come in. And the much awaited PM e-bus Seva payment security mechanism have been announced. So by and large, I would say it's a very, very forward-looking scheme for the industry. And we are all very happy, thankful to the government for taking this forward.
Now, the assumption or the assessment seems to be, Mr. Babu, that demand-side incentives are being weighed down and companies are getting the PLI benefits, if you will, happening. So, could you tell us, is there a demand-side incentive in this current thing? Because the notification doesn't quite carry anything to that effect.
See, the demand-side incentive is being talked about. Let's say 3,435 crore for the buses, which is for 5 years. And then this comes as a PM e-bus Seva consideration, right? And if you look at two-wheelers, you look at three-wheelers, it's talk about supporting 24 lakh vehicles in the scheme, two-wheelers, about 3 lakh for the three-wheelers and about 14,000 e-buses in the scheme. So it clearly defines the segment in which it will support. And this is based on the experience of the industry in the past. And I would say that each and every new scheme which is coming to support electric mobility is discussed with industry, and all of them are based on the learning of the past and how to support the right segment in which need to be done. So I think all the voices have been heard and the scheme has been defined in such a way to address many of the needs, including ambulances and other new segments which has come forward.
You know, this question I have actually both for Mr. Babu and Mr. Arya, but let me come to Mr. Arya first on it. That since this is the third version of a scheme to really push electric mobility, how would you look at it comparatively, considering that the first two had a little bit of issues in incentives, gauging those incentives? The government also then had to crack down on some players. There were some cases of misuse. Do you think it's a clearer situation at this point? I'll come to you, Mr. Arya, first on this.
No, I think it seems to be quite clear. Definitely, devil lies in the details. So we would like to understand once the fine print comes across. But whatever is visible now, I think it's much clearer. Plus, there has been a very substantial incentive given for the testing agencies to develop the infrastructure, which was very important because multiple new technologies are coming in right now. So for those technologies to be adopted, we need enablers like these which can turn around the testing, validation and homologation of the vehicles very fast to have a faster time to market. Parallelly, the PSM, which has been much awaited, I think is something which is very substantial and it will be a game changer. And I would compare this to the solar sector. So like in solar sector, you have Solar Energy Corporation of India, which is there, and that redefined the whole country's mechanism because it was able to institutionalize and give a very good comfort to investors, OEMs, and the whole industry to invest and grow. And that's how we're going to 500 gigawatt. I think it's a similar moment for the EV industry today, where India has the opportunity of becoming the EV capital of the world with such kind of a scheme coming in place and will act as a true catalyst in the next couple of years. Because in the e-bus segment, if you see on a TCO basis, we've already hit parity vis-a-vis diesel and CNG. And I think also the private market will get a huge boost with this here. And we would be looking at clearly defining things as further details are rolled out.
That question to you, Mr. Babu, in terms of the size and 11,000 odd crore rupees split, like you said, and you told us that breakup between all the segments over 2 years. What's the trickle down effect, and do you think there's enough clarity in this version of the scheme from your perspective?
I think the clarity has been much better than the earlier schemes. The allotment numbers are given upfront, and number of buses, number of two-wheelers, number of three-wheelers, everything has been given upfront. So the clarity is much better than the earlier scheme. So this will help the industry to have much better way of dealing and getting our consumers the best. We have to understand the demand incentive is given to the customers. And OEMs are only the via media to make that happen. So the incentives, I wish the state transport undertaking for the buses, even this time there is an initiative to facilitate adoption of e-buses in private sectors. So that's going to help it. So all our customers, we will educate them with the scheme and we will enable them to get the benefit of the scheme through our innovative products. That's where we are looking at.
Nishant, with your current offering, your product line, would you be looking to add any more models designed to meet the requirements of the PM e-business scheme? And also on the production side, right? One thing is that they'll spur up demand, but what happens on the manufacturing side of things? Do you feel like if you take up this scheme, there could be a direct impact on margins? If there is a PLI scheme, your margins have been in the 11 to 12% range. 11.6 is what I think you closed last year at out. What impact could we see on margins, and what would you do in terms of production as we see it?
So for production, we already have a capacity of almost 20,000 buses. We had set up a new facility last year. And on the margin side, already in this year's guidance which we have given, we have talked about beyond 12%. So we would maintain that. And clearly, this scheme, because as I said that every such project has a transition time of 9 months to a year, would be bringing such benefits to us in the next financial year, and where the projects will get executed. So definitely we would be looking forward to a higher capacity utilization with a clear roadmap of 2 years as we get more details going forward. And parallelly, one more point I would like to make is that on the charging side, with 72,000 charging stations being set up, I think it will reduce the end consumer range anxiety quite substantially. which would also motivate a lot of private customers to get into this segment. And parallelly, today we have about 9 platforms in our electric buses for all different segments. So we are very well equipped to address the needs of HUs or private customers.
Right. Actually, you want to come in on that one, talking about batteries. Mr. Babu, what is your reading of the situation with advancement in battery technology? And you've talked about charging solutions at Switch Mobility. Are you working towards, increasing or supporting the large-scale e-bus adoption? I'm guessing that's the first thing you're thinking about as well this morning. And what would you be looking to do?
See, already we have a product for about 25-seater to about 65-seater in the market. We are the only and unique OEM to have a double-decker electric with air condition running in the country that has about 65 seats. And we have a range between 20 to 65. Our intention in the next 3 years is to play in all the fields from 13-seater to 65-seater. As you know, we have also light commercial vehicles, which is Switch IV3 and 4. We have about 6 to 7 products in the market. We are looking at bringing every year about 2 products in the next 3 to 5 years to meet the customer requirements. And as we see, these incentives to the customers will only enable state transport undertaking and private in the bus segment, and for scrapping in the truck segment. So we are fine. Actually, the total cost of ownership break-even has come in already for both buses and light commercial vehicles without incentives. But incentives will make more adoption. Today, bus is about 3.5% adoption in electric, and LCVs are less than 1%. We are expecting this to go up, which will give a boost to the environment, to the customers, as well as to the industry.
I just want to understand, I mean, the direction is great, EV is the future, no doubt about all of that. But in terms of the private players, of course, state governments and government is incentivized to have mass transit in EV that will flow through. To move private players to electric vehicle options for buses, etc., you need to have a smaller gap in price differential. Does this policy help you achieve that? Mr. Babu, let me come to you first on that point. And I'm trying to understand that in actual terms of squeezing that price differential between what is publicly available in diesel, CNG, etc., and in EV, how much does that reduce?
Already we have supplied EV buses to our private players. We are running a large employee transport in 3 different cities. We are running a luxury transport in Mumbai with our partner Chalo. And we are running multiple applications in private, and they have been demanding incentives. In this scheme, it is said that the initiative seeks to facilitate adoption of e-buses to encourage private sector players. So there are 2 portions to it. One is OEMs have been asking government to allow private operators to come and run the buses than OEMs in the GCC model, which is the PM e-bus Seva system. So that has been allowed, and that is very welcoming that private players comes and run public transport and OEMs supply the buses and maintain it over a period of time. I wish that is the part of this scheme. And we are also looking at how private players' total cost of ownership and applications become viable. So we need to see the details of the scheme, but there is a very small adoption of private players already in EV, and we believe such scheme will only boost their confidence and look forward to adopt further in the private segment.
I'm sure, but I'm trying to understand that how much does the price difference reduce? Mr. Arya, any perspective on that? Because all that boost will actually come if a customer doesn't have to pay more to go EV.
In the previous scheme, what we had in FAME 2, it was about 40 to 50 lakhs, which was the subsidy amount. And that was the kind of price differential which we were seeing from the conventional CNG diesel buses to electric buses, if we look at the tier 1 cities. And that is why that viability gap funding kind of subsidy was decided. So I think we all look for the further details, but I feel the kind of subsidy framework would be similar in the current PM e-drive scheme. So we are all getting ready to be driven forward with the vision of our Honorable Prime Minister.
final words really. So Nishant, you mentioned about growth right now, but looking at the way the legs are coming up, there's also an observation that startups aren't getting the PLI incentives because they're not qualifying, but the listed OEMs are. So the two of you certainly benefit. So the same question to both of you, Nishant. You've given guidance for FY25, fine, but what's the kind of growth that you envisage is in store for the next 3 years, let's say, or 5 years, depending on how far you can gauge?
See, end of this decade, I feel we are looking at least 70% of the new buses being electric. And definitely the market will transition because the 8 lakh program will also kick in very soon for the whole market, for the school and other buses. And clearly, here what we will see is that India has the capacity to become the global EV manufacturing powerhouse. And that is what will happen here. Additionally, the semiconductor perspective and scale coming in, so not only for India, but for export markets, will become self-sufficient as semiconductors are an integral part of electric vehicles with power electronics and other initiatives. Parallelly, I see that.
So Nishant, what would it mean for you? Sorry, just running out of time. What would it mean for you? Let's say you're seeing 70% Indian market, electric buses, you have 30% market share. What's the forecast of CAGR growth for JBM?
No, definitely we would look forward to over a period of next 5 to 6 years, see 40 to 50% CAGR growth over a period of next 5 to 6 years.
40 to 50% top line CAGR growth over 5 years. Wow, that's...
Yes, in our EV business, that is what we would
in the EV business. Wow, that's strong. Mahesh Babu, what would your sense be? CAGR growth for you?
I think there are plenty of orders in hand. We have about 2,000 orders as we speak in hand. We are seeing next 10 years CAGR growth of 45 to 70% depending on the scheme. If no other schemes are there, we are sure we'll get about 40% CAGR. If schemes like PM E-Drive comes in and there is a push, we look at upside of 55%.
We wish you.
So
that's strong numbers, Tamanna. That's really strong numbers from both our experts. And I think this piece is only getting built out. So for now.
I mean, look at the space to go. If you're 3.5% of the market is EV buses, then it's just blue sky from up there. Thank you so much, Nishant Arya and Mahesh Babu, for speaking with us today on what is an important day and a fantastic conversation, really, to give you a true sense of how much of a game changer this will be. Because world over, you are not really going to move the needle unless policy or government comes in and pushes it. I think electric charging availability will be a big one, because for long distances, which is what buses will do, you cannot really have any question mark.
And it's great that they are putting, the government is thinking of doing that, because this policy that has come in yesterday, there's a major focus on that charging infrastructure as well, which could actually be a big thing. Now, is JBM Auto reacting? Yes, it has. I mean, it's off from the highs of the day, but still up about 5%. I wonder if Ashok Leyland has some reactions to it, and bring up the others which are in this space. M&M is a bit soft today. Ashok Leyland has come off from the highs of the day. So an initial surge, and some of the stocks have come off from those highs. But be that as it may, it seems to be constructive. But 50% CAGR growth for 5 years in the EV business, or for Switch, 40% CAGR growth. These are very heady numbers.
Yeah, I mean, because that push is definitely there. Heady numbers are great. M&M was expected, perhaps, because nothing much for passenger vehicles. Nothing at all, actually, for passenger vehicles versus FAME 1 and FAME 2. I want to see what Electra Green Tech is also doing this morning after, the boost for buses, because that's one big one. Also come off lows. Actually, JBM Auto is the big winner this morning, and we had a great conversation with Nishant Arya on that just a few minutes ago. But what else is moving in this market? I mean, Keynes Tech and Dixon are the other ones. Nomura has initiated coverage on both stocks. And look at Keynes Tech this morning, 6.5% up. This despite the flip-flop, yes, no on their OSAT green signal, or their semiconductor business's green signal. It came in and then they said, but we're still waiting for a formal note from the government, etc. Nevertheless, Keynes Tech is another buzzer this morning, absolutely moving forward quite sharply. On the sell side, you're seeing more of profit booking than anything else. Easy Trip down about 2%. So even though they want to get into EV buses, I don't think the street is seeing any move for them right now. Tata Motors, on the other hand, is having another tough morning after nearly 5% beat yesterday as well. Tata Motors down about 1.5% in this morning's trade as well.
Well, let's take over to the paint space. AkzoNobel, the chairman and managing director, Mr. Rajgopal Johnson, right now for his sense on how is business looking like, particularly in light of the fact that we are on the cusp of, or in fact, in the midst of the festive season, and oil prices have come off. Mr. Rajgopal, good having you. Thank you so much for taking the time out and speaking to us today. This is Niraj Shah here. Good morning. Trying to gauge, sir, we were speaking to one of your peers yesterday who mentioned that despite in fact, two large groups coming up in this space and making their presence felt, the growth numbers thus far haven't gotten impacted and very likely will not get too impacted in the times to come. What's your sense?
Good morning, Niraj. Thank you for having me on your show, and good morning to you and all the viewers. First and foremost, if you look at the last quarter, I think the market was a bit tepid. If you look at our volume growths, they were in the double digits. If you look at our revenue growth, right, we had revenue growth which was also single digit, and our performance was slightly or ahead of competition, I would say. Yeah. Coming to your specific question on new players, look, I think it's a large market. You're talking of a market of 60,000 crores. And, frankly, if you were to ask me, what I see right now is that the incremental growth that was there is obviously getting shared between the various players. Yeah. That said, I think we have a very clear strategy, Niraj. We've got a very clear strategy for each of our portfolios, whether it's in the paints, or the verticals like powder, our automotive specialty coatings, marine and protective and industrial coatings, and we stay focused on execution of our strategy.
Okay. So in which case, Mr. Rajgopal, if indeed you believe that the market is wide for everybody, and the belief was that the newer players which are coming in with these large plans may first impact not the numero uno player, but the number 2, number 3, number 4, number 5, number 6. I hear from you, who's a large player nevertheless, but not the number 1 player currently, saying that you do not believe there will be an impact. Let me try and ask you, what are the kind of growth rates that you envisage, considering that we are entering a busy construction and a festive season, let's say for the next couple of quarters, then we'll get to the longer term picture.
So look, Niraj, what I've always been saying is that in this fiscal, we are targeting and we should be on way of delivering a double-digit volume growth. I stick to that, because, on a month by month, quarter by quarter, sometimes you'll have certain vagaries. Like in the month of August, you had inclement weather, which still, many parts of the country, it's still raining. And obviously that impacts the exterior and some of the other categories. And hence on the paint side, very difficult exactly to say, how it will pan. But yes, I think we are looking at still a double-digit volume growth, and that will obviously at a point in time, the value growth is following the volume growth primarily because of the price drop the industry took between December and January of about 4.5%. While we've taken some slight price increases in the last 2 months, it's obviously still not compensating the drop that we've had. Yeah. So to answer your question, look, I think for us, the reason we believe that we can still do it is because we believe that the value of Dulux in the paints is all about being international, best-in-class quality, right? Is also about innovation, and it's about color expertise. We believe that we've got a unique proposition in each one of this, which is slightly different from the rest of the industry. And if you look at our share, our market share in premium is significantly higher than our overall market share. So we've got approximately about a 15-16% market share in premium alone, right? And I'm talking only emulsions, right? So if you really look at it, that has been our strength. The fact that we are a premium quality brand. So really, when a new player enters, typically what we see is it's in the mass and the economy where it is. We are also playing in those segments, but we have significantly lower share for us. So hence, a little less to lose in that matter. That said, look, it's very difficult to predict. As I said, we are focused. We've got a very focused strategy. We are building our digital ecosystem significantly. We are looking at inefficiencies in the system. Our endeavor is to make sure as a challenger brand that we stay competitive. We are going to remain very competitive. And like you said, in the festive season, we've just launched a plaint for the top-end consumers, for the most discerning consumers like many of yourselves, called Dulux Velvet Touch Eterna, and we've seen a fantastic response in the few weeks that have gone by. So we are focused in our exterior portfolio, Weather Shield. We've just recently launched and dustproof, again, which comes with a unique proposition. Look, when we launch a paint with a proposition, I'm sure if you speak to dealers, Niraj, dealers will tell you that we are significantly best in quality. So that's been our moat. We want to continue that. We want to make sure that whatever we do it in a, with the stamp of quality, and that's where we are really focused on.
Mr. Rajgopal, very good morning. Tamanna here. Just wanted to, great to speak with you. Just wanted to understand your outlook to what has been happening with crude. And we've seen a bit of a bounce back overnight, but crude price is largely trending lower, and that's now been for a few months. How much is it helping you in terms of margins? And do you see that trend continuing even as you've already taken a price hike?
So Tamanna, it's an interesting question. There are two parts to it. Look, in the paint pricing, there are two elements that drive the pricing. One is crude and the other is the foreign exchange, right? The forex, the currency volatility. So if you look at the currency side, which very few people talk about, right? Still against the dollar, if you look at the rupee, it is, we still have some way to go. I wouldn't say the rupee is very strong. It has been in a range, but that's been, if you take over a year period, it had sort of moved up, and that's been one challenge for players like us. The second, as far as crude is concerned, we've seen a little bit of a downswing in the last few weeks. Now, all of us carry inventory. We are entering season, so obviously we've got to be a little careful. What I would expect is that you would start seeing a margin accretive more towards Q4 and early Q1 if the trend were to continue. The reason I'm a little circumspect is, Tamanna, is there's so many things happening in the world around us which are a little uncontrollable. The Middle East geopolitics, there are a lot of other variables that come in. So I think we need to sort of take a bit of a pause, look at, not get too carried away by daily, monthly trends, and see how it's really going to last, and then start looking at strategic decisions on pricing, etc. So at this point of time, we believe, yes, I would use the word that it has become a little more stable. I wouldn't use the word that it is dramatically dropped, unless we see, for other reasons, certain larger economies not really bouncing back, etc. Then we believe that, look, in the next quarter and more in the first quarter, the fourth quarter of the year fiscal, we believe that you would start seeing it accretive to the P&L.
To what extent, Mr. Rajgopal, even till Q4?
So I would say, look, normally one should expect between a 2% at a weighted level, because some of these foods account for 30 to 40%, right? Assuming that the currency, the rupee, is also in the same range. If the rupee strengthens, which all of us are hopeful of, then there would be further positives.
Okay, so what is the margin outlook overall? So crude is one part of that picture. Your margins in Q1 are about 16.3%. So you're looking at this range for most of the fiscal.
Yeah, so Tamanna, there are two parts that you've got to look at. If, for a challenger brand, a 16% tells you the sort of business that we run. It's a very high-performing business. It's a very premium business, right? So for me, I would like to be in the range. For me right now, if I'm in that range of 16%, I think I'm fine. I think for us right now, it's being competitive, making sure that we continue to grow and be in the top two in terms of growth, which we've now demonstrated for, I think, more than 2 years. So I think that's the focus, and using the blend of our paints and coating businesses to drive a higher performance, drive much better customer satisfaction, come out with innovative products, and try and make sure that we win the hearts of the customers in India. That's really the focus, Tamanna.
Okay. So much more to talk to you about, Mr. Rajgopal, but maybe a longer chat down the line. Great to speak with you and check in on the margins outlook, crude prices, and a lot more. That was AkzoNobel. And, just as we wrap on a talking point on the show and, cue you in to Talking Point up next, it's been a good morning for the markets. We're leaving you with the Nifty comfortably above the 25,000 levels there, and a lot more, of course, to follow. But that's all the time we have for now. Thank you for tuning in.
Thanks so much for tuning into Talking Point. I'm your host, Niraj Shah. The last 10 days, pharma has made its presence felt, and how? From being a defensive sector to actually having a good performance in 2023 as well. But more importantly, this whole murmurs and then the subsequent passage of the Biosecure Act brought the CDMO players in focus. A virus here, a disease there, keeps diagnostics and healthcare in focus as well. So we thought it best to try and get somebody who probably eats, sleeps and breathes pharmaceuticals and healthcare in terms of money management on the show to try and understand from him how does he think of the space currently and the various pockets or subsets within healthcare. Chirag Dugli, fund manager of the DSP Healthcare Fund, joins in right now. Chirag, great having you. Thank you so much for taking the time out. Good morning.
Thank you so much for having me.
Now, the pleasure is entirely ours. And Chirag, your fund's performance has spoken volumes about how well you guys have managed this space. I'd love to understand how do you think about the things now. So, first up, I'm going to bucket my conversation into 2 or 3 spaces, Chirag. I'm going to start off with the recent news flow on the US Biosecure Act. Lot of chatter around this, lot of talk about how, albeit while it's long term, there is a massive opportunity for CDMO, CRO players. Do you agree? How do you think about this?
So clearly there is an opportunity. Indian players are at the forefront of this opportunity. We've been very good at chemical synthesis for a very long time. And if you see, while this opportunity has always been there, it is only a very gradual process that, this increase happens. And what the Biosecure Act will do is that it will essentially accelerate that change. If you see, through COVID, everybody has been trying to de-risk their vendor supply chain. In COVID, we saw a lot of challenges through. So all innovators have been trying to do, if they are largely in China, then China +1. If they're largely in Europe, then Europe +1, and so on and so forth. And clearly, India is at that center of whether you want to do Europe +1 or China +1. So this has been going on for a while, below the scenes, while the litigation, the legislation has now come. But this has been in the process, in the progress, in discussions in boardrooms for better part of the last 12 months. And which is why you see most of the CDMO players in India reporting very, very strong inquiries, very strong numbers in terms of the RFPs, the proposals that they are actually seeing.
Okay. So, Chirag, okay, now just trying to understand again, and maybe it's a repeat question, but I'm just trying to understand. Do you reckon that the benefits of something like this, potential benefits, could come in soon? Could it be delayed? And a lot of people are saying that the second half of the current fiscal will probably start seeing some green shoots for the CDMO CRO space. In fact, the companies were saying as well that forget the first half, but the second half will be very strong. I'm just trying to understand, could the Biosecure Act passage lead to that, or are there other factors? And do you also believe that while they've kind of lagged in the last 6 to 9 odd months, that the next 6 to 9 odd months could be constructive for them?
No, 100%. And this is irrespective of the Biosecure Act, right? The Biosecure Act is just still in process of getting official and so on and so forth. Any which way, companies are talking about a very sharp recovery in the second half. And typically for all CDMO companies, second half is much better than the first half. So a little bit of that is seasonal, but also their own order books, their own pipelines were such that the second half of this fiscal was expected to see a very strong recovery of the low base of the first half.
Okay. And final question on this, Chirag. Again, I know it's a very difficult one, but as investors, as an investor or fund manager, you're building out a hypothesis and then hoping for it to work. My question is your hypothesis over strong growth for the next few years based on Biosecure, RFQs, etc., for this CDMO CRO bucket? Is it possible to predict 2-3 years out, or are you playing it by the year?
No, I think it's a little more longer term, kind of a long, strong runway to grow. That's what whether it is biosecure or it is China plus one strategy that innovators have been following for post-COVID, it basically paves the way for a very strong, opportunity for Indian players. We've been very strong at chemical synthesis historically, and this plays to that strength. The opportunity is now present for a very long time. We can keep growing at that double-digit that kind of opportunity is present is what we're essentially saying.
Okay, so you reckon that it's maybe a 5 to 7 year runway of growth possible because of all of these factors, and could it be like above mid-teens growth or higher than that, or is it difficult to call?
What companies are effectively saying is that is how they're thinking about the growth opportunity.
Okay.
Whether that it can be anything. There can be many things that can go wrong. Their clients' products have to do well in the market. So there are lots of ifs and buts. But the opportunity certainly is present.
All right. Just a segue, because some of these companies are also manufacturers of APIs, right? What about that bucket? Because there is this hope that API growth will pick up. I mean, Granules has mentioned that in the last few conversations. Their numbers have looked okay too. Some of the other companies have shown that too. Is that looking okay, or is it very seasonal in nature per se?
So today what is happening in API is that margins are under a lot of pressure for the generic API business, in some sense the commodity part of the business. Margins are under pressure across the board. Prices were correcting, but what we've seen of late, maybe over the last couple of quarters, has been that for many products, prices on the lows have now stopped falling further and stabilized in some sense. So API margins are at, I would imagine, such lows that I think they will trough out over here and probably pick up from here on, as we go along. But clearly margins are under pressure for the generic API business.
Okay, fair call. Now, Chirag, the other aspect is what to do with some of the recent developments that have happened in companies, kind of specializing in that, specialty drugs. I mean, suddenly we saw moves, policy moves around cancer drugs, and some of the companies in that bucket have done really well. There have been other examples as well. Do you believe specialty drug makers could actually have a stronger runway now that insurance is also percolated, or health insurance has percolated, and people might have access to expensive treatments, which was not a case maybe 10 years ago? So just trying to understand, could specialty drugs of all kinds be showing a strong runway of growth, and are Indian companies there to benefit from this?
So specialty opportunity in India, right? Let's break the two pieces, right? One is in the developed market like US and Europe, etc., and then there's obviously in India. In India, I think we've seen most of the multinationals actually prioritize new product launches in India along with the developed market. So this is a big change. I mean, it's a gradual change that has happened, but 10 years back, this was probably not there. 5 years back, a little bit of this was there. Now, increasingly, we're seeing most of the multinationals actually launch their new products, their patented products in India along with the developed world. So that's clearly something they see the potential for India. And this is such a large market, right? 140 crore population, whichever way you slice and dice this, there will be a small market like a Switzerland or a France that will just pop out of that. So, the opportunity is clearly there. Companies appreciating that, multinationals appreciating that, and certainly launching products, on patent products along with the rest of the world in India. Now, so that's the India piece, right? In the meanwhile, incremental innovation and a little bit of, innovation that has been going on for a very long time, and that continues in the Indian market. Now, coming to the specialty part in the developed world, some of our larger companies have actually shown the way that this is a very, this is not a small, this is a very, very balance sheet heavy, needs a lot of cash flow, big, long gestation period, etc. to do well in the specialty piece. But some of our leaders in India have actually risen up to that opportunity and shown the way of how they can succeed selling specialty patented drugs in the developed world. And more of this will happen, I think, as some of our as some of the companies lower down also reach a certain threshold of financial cash flows, they will also look to enter some of these markets with own specialty products. So, but that's some time away before we start seeing some, where we can say that Indians are now doing very well in specialty in the US. That I think today we are only seeing a couple of companies. As a trend, it might take some time for it to develop.
Okay. Now, Chirag, where within this whole healthcare construct or the healthcare space are you the most constructive on? Because there are various buckets here. Where are you most constructive and why?
So, as I always say, healthcare is not just one sector. There are multiple buckets. You put the India formulations, the export formulations, APIs, CDMO, hospitals, diagnostics, and now we have retail pharmacies as well. So multiple of these buckets. Each of these have opportunity to grow in double-digit kind of a range. Is how we are kind of thinking about this top-down. Now, as far as capital, generally these markets, these businesses don't have too many cycles per se, right? Sure, they will go through a little bit of RM prices, volatility, some bit of seasonality in demand, etc. But by and large, businesses are not very cyclical. If you look at a long-term chart of demand of these products, of each of these, you will see a secular kind of increase. So that kind of continues. But capital markets have their own cycles of whether they prefer this versus that, depending on news flows and so on and so forth. So capital markets have their own cycles within these buckets. The businesses themselves don't have too many cycles. The only piece which is cyclical in the entire basket of multiple segments is commodity US generic business, which goes through a bit of a cycle. And last 12 months, we've seen a little bit of an upcycle. From the lows, we've seen a little bit of an upcycle in the US generic business. And that, I think, will continue for some time. So that's just the lay of the land. And if you ask me where is the opportunity, I think the opportunity is across the board in each of the buckets. There are stocks, there are opportunities to invest in. But if you just kind of list down the multiple buckets in terms of growth, then clearly CDMO API will be up there in terms of mid-teens kind of growth potential, whereas hospitals diagnostics will be somewhere lower, maybe in the 12 to 14% kind of range. And then you'd have the Indian pharma, which will be in the 10-11% kind of range. So that is how the growth, will stack up. That's how we broadly kind of look at it.
But Chirag, relative to the valuations existing, would the higher growth companies still be the favorites because they might be trading expensive? I mean, I look at the valuations of a Syngene, a Laurus, etc. They are very, very expensive companies. So do they still remain favorites, or I'm not saying they are your favorites, but I'm just trying to understand in the pecking order, would they? Some of them might be expensive as well. So valuations versus growth perspective, what would stand to be the favorites?
So, I think across the board, most sub-segments have seen a big re-rating. Even India businesses, which used to trade at a premium to, export businesses, even on higher multiples 12 months back, those businesses have actually re-rated much higher. So tough to call, separate out a section where, you will see that this as an entire space, the valuations are very attractive. Within spaces, you have to keep looking for opportunities is how we think about this, Niraj.
Okay, so I'll try and pick up one by one. We've spoken at length about the Biosecure Act and CDMO CRO, so leave that out. Now, hospitals. Let me try and come to this. A lot of chatter around new bed addition, consolidation within this space with the larger chains gaining over some of the others. That's the other piece that I hear. And then I hear, of course, about the fact that, or about the possibility that branded chains would stand head and shoulders above the others and therefore gain both in revenue growth and valuations. I'd love to understand how you think about hospitals.
So clearly what we've seen in the last 3 years is that most hospital companies have reported double-digit ARPOB growths. And clearly that's not something that's sustainable. A part of this is a mix of both case mix improving, the maturity profile of the hospital overall improving. Clearly that, sustaining double-digit ARPOB growth looks unlikely as we go along. I think a more reasonable expectation could be a single-digit ARPOB growth and probably a single-digit kind of patient volume growth, and that blended into an overall 12% kind of 12-13% kind of growth is how is the construct in the hospital space. When you think of the larger chains, the listed ones, clearly they're gaining market share. Clearly we're seeing that there's a lot of potential for these companies to, So two things are happening. One is that in their core markets where they have a very strong brand name, they are expanding brownfield capacities at existing locations. The other thing that is also happening is that there's a lot of M&A that is happening, that standalone hospitals are actually getting corporatized in some sense, selling themselves out to corporate chains. And this works well for both, right? So let's say if there's a doctor-run hospital, 100, 200 bed hospital in a city, a doctor can, take it only so much because he's doing both the administrative work as well as the clinical practice. When they get attached themselves to a corporate structure, the admin part just goes out, right? The corporate structure manages the admin part, whereas doctors can just focus on their clinical practice. So it's a win-win for both. And that structure we're increasingly seeing a lot more come through. And I think as far as the opportunity to grow on their own, this whole brownfield expansion in cities where they're already present and have a very strong presence, that also seems to be continuing. So the opportunity is certainly there. Most companies are talking about doubling of bed capacities over the next 4 to 5 years at the very least.
Okay, but so and between hospitals versus diagnostics, a lot of people tend to make that comparison. We're trying to think whether you want to buy either or. Do you kind of look at them that way, and do you have a favorite between the two?
So look, tough to compare the two businesses. Hospitals clearly asset intensive business, high entry barriers. You need almost about 100 licenses to start a hospital, right? So if you and I decide to put up a hospital in a location today, the hospital will come up in 3 years. It will run at EBITDA losses for another 2, maybe 3 years, and then start making money. So very high entry barriers in hospital. Diagnostics, on the other hand, there's hardly any capital required in the business, very low entry barriers, etc. So the two businesses are very, very different. Both offer similar growth, I would say, maybe plus minus, some bit, but similar growth. But capital efficiency is much higher in diagnostics. So to pick favorites, difficult, I would say. Valuations across the board are high. Within pathology, or rather within diagnostics, much easier to pick up a radiology business because it's just difficult, much more difficult to disrupt a radiology business. And within hospitals, just much easier to pick up a a multi-speciality hospital chain which can, which can deploy the capital that its existing beds are generating, the cash flows that its existing beds are generating to grow and build more beds. So that's how we think about this, rather than comparing diagnostics with hospitals. You try to compare within hospitals which are the hospitals that can potentially grow through internal accruals, and from the existing beds that are there in their base, the capital that is generated from there, can they deploy into newer markets, newer geographies to grow, is how we kind of think about this.
Mm-hmm. Are you constructive hospitals? Are you constructive diagnostics currently?
Constructive, but I mean, valuations are a little bit punchy, clearly. One of the things we've seen in diagnostics is that pre-COVID, all of these companies used to grow in the mid to high teens range. Through COVID, there was a lot of challenge, etc. And growth X of the COVID business had actually come down to very early double digits, 10, maybe 11%, that kind of a number. And that now is inching back up to 13, 14% is what we are seeing. We're seeing a little bit of growth acceleration come back in the diagnostic companies. That's one change that we see. But that said, clearly valuations are punchy.
Okay, valuations remain punchy indeed. Okay, the last couple of pieces, Chirag, that I would want to understand from you. Where is it that you believe the next triggers of growth come in? Again, very wide bucket. So it's a bit of an open-ended question, because you yourself counted about 7 or 8 buckets. So no one trigger will work for each. But I'm still trying to understand, because you probably look at the whole space, or from within the buckets that you look at, where is it that the next big trigger is likely to come in? Like for CDMO, the Biosecure Act was supposedly the big trigger in the minds of people. Where do you think the next big trigger comes in for any of the buckets that you are looking out for?
So I think the next big negative trigger can be some regulatory action. Clearly, that's one of the big pieces that worries us a little bit. And this is across businesses, whether it is in pharma manufacturing, whether it is the US FDA, or it is hospitals, or the domestic market, price control, and so on. So that is something that is a little bit of a uncertainty there. Apart from that, in terms of growth triggers, I think this business across the board just keeps chugging along, right? CDMO, while today we talk about Biosecure Act, etc., but the underlying trends of doing this de-risking away from China or away from Europe, these have been around for better part of the last 12 to 18 months. So I'm not sure if I can identify any milestone that this is going to happen and that's going to lead to the next big move, etc. I'm not sure if I'm able to identify any such events or triggers.
Okay, my final question to you, Chirag, and that is on the big pharma out of India, right, which have this large US exposure or global exposure. And I'd heard enough people talk about how the pricing pressure might go off, then talks of the pricing pressure coming back, then Revlimid helping some of these players in posting very strong revenue, and then conversation now starting to come in of generic Revlimid or some of the drugs probably ending the massive revenue boost that they gave to 2 or 3 companies in particular, but maybe a lot of others too. So I'm trying to understand what happens to the Sun Pharmas, Reddy's, Ciplas, Lupins of the world, Aurobindos of the world over the course of the next 24 months. How do you see that picture?
So 2 things happen. One is that the US-based business, right, which is the traditional commodity, fully generic kind of business, that continues to chug along. Price erosion remains fairly benign, and that prognosis that we have, that price erosion will remain benign, that will continue over the next 12 months for sure. As far as the big products are concerned, and Revlimid is just one of them, as far as the big products are concerned, some of these will just stop off, right? So Revlimid will become fairly commodity product starting January 2026, maybe earlier, as this is a date certain, and this it's a market, so players may behave differently. So that's certainly happening. The way we are approaching this is that companies where there's a very high profit contribution from a couple of products, and where valuations are also a little punchy, we're staying away from such companies is how we are kind of thinking about this. Wherever there isn't very high or not as high product concentration, those companies still we continue to own. So a combination of higher multiples with higher product concentration is an absolute avoid, is how we are kind of today thinking about this whole US business across multiple players.
Okay. Well, it's a difficult space to invest in. Some pockets have triggers, some pockets have future triggers, maybe some negative ones as well. Chirag Dugli, they're laying it out beautifully for us. Thanks so much, Chirag, for taking the time out and being with us. Really appreciate it.
Pleasure. Thank you so much.
All right, that's the view on Talking Point today, viewers. Thanks so much for tuning in.